Where to?
I think it's my turn to call a witness.
Oh. Mr. Sheehan.
I call Michael Wright.
Mr. Wright, would you prefer to take an oath or would you wish to be affirmed?
Affirm, please.
Affirm the witness, please.
I solemnly and sincerely
I solemnly and sincerely
declare and affirm
declare and affirm
that the evidence I shall give
that the evidence that I shall give,
will be the truth,
that
will be the truth,
it will be the truth,
the whole truth,
the whole truth,
and nothing but the truth.
and nothing but the truth.
Yes, do sit down. Thank you very much. Yes, Mr. Sheehan.
Commissioner, your full name is Michael Wright with a W,
Yes,
and your business address is Tower 2, International Towers, 200 Barangaroo Avenue, Barangaroo in New South Wales.
that's correct.
And your current position is National Head of BT Finance.
That's correct.
You have attended the Commission pursuant to a summons dated the 12th of April 2018.
That's correct.
Do you have the original of that summons there?
I do.
I tender it, Commissioner.
Exhibit 2.100, summons to Mr. Wright.
And Mr. Wright, for the purposes of the Commission, you have so far prepared 3 written statements.
Yes, I have.
Right. The first statement is dated the 5th of April.
That is correct.
Do you have a copy of it there?
I do.
Commissioner, it's time for me to apologise again. There are 2 non-trivial corrections to this statement. The corrections have been reduced to writing for everyone's assistance. Our learned friends have had the corrections for a couple of days,
Yes.
and they are on the system as WBC.900.001.0350. I'll hand a paper copy of that
Thank
to
you.
the witness and to you.
Thank you.
And by way of explanation, Commissioner, the substance is to correct documents so that they are the current versions of the policies referred to by Mr. Wright at the relevant paragraphs of his statement. And
Yes.
I'll deal with it in the following fashion, if I may. Mr. Wright, you have your statement there in front of you, your first statement,
I do.
and the list of corrections to it.
I do.
Right. Now, if you go in your statement to paragraph 51A,
Yes.
do you have a pen?
I do.
All right. Now, paragraph 51A is the subject of the first of the corrections that's in the separate piece of paper,
Yes.
and it relates to the words in brackets starting "See Style Guide" to the end of that subparagraph.
Yes.
Would you cross out those words and initial that for me, please?
Sorry, was it just cross out C style guide?
To the end of that
the end.
subparagraph.
Yes.
And if you go to paragraph 129, the second correction in the separate sheet relates to the words commencing at the end of that subparagraph, Exhibit MW1, to the end.
Sorry, could you repeat that?
The second correction in the separate sheet relates to the reference at the end of that paragraph, Exhibit MW1, and so on.
Yes.
Would you cross out those words at the end of that paragraph and initial that change?
Yes.
Mr. Wright, with those changes in the separate document, are the contents of your first statement correct to the best of your knowledge, information and belief?
It is.
Commissioner, I tender the first statement of Mr. Wright, including Exhibit MW1. Its document ID is WBC.900.001.0179.
A statement of Mr. Wright of 5 April 18 and its exhibit together, I think, with the core agenda in WBC 900.001.0350 will be Exhibit 2.101.
Thank you, Commissioner. And I also tender the 4 documents referred to in the core agenda.
In part of Exhibit 2.101 will be not only with the core agenda and documents identified in those core agenda. Yes.
Thank you, Commissioner. Mr. Wright, your second statement is also dated the 5th of April.
It is.
You have no corrections to make to it, I think.
I don't.
Are the contents of that statement true and correct to the best of your knowledge, information and belief?
They are.
Commissioner, I tender that statement and Exhibit MW2.
Second statement of Mr. Wright of 5 April 18 and exhibit will be Exhibit 2.102.
And the document ID is WBC.900.001.0163. There is a third statement of yours, Mr. Wright, which is already in evidence. It's a statement dated the 13th of April 2018. It is Exhibit 2.10.
Mine's 16th.
16th, I'm sorry, forgive me. And it is WBC.900.001.0326. Although it's in evidence, Commissioner, I think I should ask the witness if he affirms its contents. Mr. Wright, are its contents true and correct to the best of your knowledge, information and belief?
They are.
Thank you. I have no further questions.
Yes, thank you. Yes, Ms. Orr.
Mr. Wright, you're the National Head of BT Financial Advice,
I am.
and BT Financial Advice is a business unit within a company called BT Financial Group Proprietary Limited.
It is.
And BT Financial Group Proprietary Limited is the wealth management brand and division of Westpac, which provides financial products and financial advice services.
It is.
And you've been put forward by Westpac to give evidence about Westpac's financial advice business.
That's correct.
And Westpac operates that financial advice business through a number of different entities.
Yes.
It has about 500 employed financial advisors who operate under Westpac's financial services licence.
Correct.
And you refer to those advisors in your statement as being part of BT Financial Advice. Is that right?
That's right.
And then Westpac has about another 500 financial advisors who operate as authorised representatives on behalf of either Magnitude Group Proprietary Limited or Securitor Financial Group Limited. Is that right?
Correct.
And both of those entities are wholly owned by Westpac and have their own financial services licences.
They do.
And you refer to these advisors, this second group of 500 financial advisors in your statement, as being part of a business unit called BT Group Licensees.
Yes.
You've provided 2 statements of your 3 that deal with the topic of inappropriate advice.
That's correct.
And one of those deals with Westpac's financial advice business generally and with the conduct of 3 financial advisors who provide advice on behalf of Westpac.
Who did provide advice on behalf of Westpac, yes.
Thank you. And the other deals with a 4th financial advisor who did and still does provide financial advice on behalf of Westpac.
As a part of my second statement, yes.
Yes. So I want to start with that second statement, which deals with the 4th financial advisor. And that 4th financial advisor is Mr. Ramakrishnan Mahadevan, who gave the advice that we've just heard about to Mr. and Mrs. McDowell.
Yes.
Yes. You've heard the evidence from Mrs. McDowell about the advice that she and her husband received?
I did.
Thank you. And I'm going to come to that advice in some detail shortly. But first I want to ask you about the arrangements that Westpac has with its employed financial advisors, using Mr. Mahadevan as an example, because he is an employed financial advisor for Westpac, is that right?
He is.
Thank you. And Mr Mahadevan commenced as a financial advisor with BT Financial Group in October 2006.
That sounds right. I can't remember exactly.
Thank you. Has he been an employee with Westpac since that time?
Yes.
And Westpac has not put Mr Mahadevan forward to give evidence about the events involving the advice provided to Mr and Mrs McDowell?
No.
And this is despite him being a current employee of Westpac?
That's correct.
Why not?
We felt that I'd be much more appropriate to deal with the statement, in particular with reference to statement 1.
What about statement 2, Mr Wright, which deals with Mr Mahadevan's advice to Mr and Mrs McDowell?
Yes, as I said, we felt because I was doing statement 1, which dealt with the issue of inappropriate advice, also for statement 2, Mr Mahadevan, it made sense for me to do that as well.
Did you talk to Mr Mahadevan about the events involving Mr and Mrs McDowell to assist with the preparation of your statement?
Not my draft statement, but I did speak to Mr Mahadevan.
When you say not your draft statement, the final statement that you've provided, did you speak with Mr Mahadevan to assist you with the preparation of that statement?
Yes, I did.
You don't refer to that in your statement?
Apologies, I think I do refer to that. I can't remember which paragraph, but I do refer to speaking to Mr Mahadevan.
Well, the paragraph that I think you might be referring to is paragraph 3, which we have on the screen at the moment. We may be in the...
Paragraph 12.
I'm sorry, paragraph 12. Thank you. To inform myself about what happened and for the purpose of answering the questions I have been asked, I have spoken to BTFG employees who had some involvement in this matter, including Mr Mahadevan, and I have also reviewed the documents above. That's the
correct.
paragraph you're referring to. Did you speak with Mr Carl Slyman, the other person who was involved in the provision of the advice?
I didn't.
You didn't speak to him?
I didn't.
And is he still employed by Westpac?
He is.
And why is he not giving evidence about these events?
Because we made a call that since I was doing statement 1 on inappropriate advice, I would also do statement 2 in relation to Mr Mahadevan.
But you put that statement together without talking to Mr Slyman.
I didn't know.
You didn't talk to Mr Slyman.
Apologies, I didn't speak
Yes,
to Mr.
thank you. But you told us in the statement and you reiterated in your evidence that you did have some discussions with Mr Mahadevan.
Yes.
Thank you. What's Mr Mahadevan's current role at Westpac?
Mr Mahadevan is a portfolio advisor.
And what is a portfolio advisor?
A portfolio advisor is an advisor that services a portfolio of customers who pay an ongoing advice fee. They don't take referrals from branches, they just serve their portfolio of customers.
So is that still a financial advisor role?
Yes, it is.
And Mr Mahadevan, you tell us in your statement, was appointed as a senior financial planner in October 2011.
Can't remember the exact date, but he was appointed as a senior, yes.
Yes, I'll take you to some documents. What I want to understand is whether his role as a portfolio advisor is a more senior role than the role that he had previously at the time of giving the advice to Mr and Mrs McDowell, which was a senior financial planner.
No, it's not.
Right, and how does it relate to the role that he was undertaking at that time, the senior financial planner role?
They're equal. He's a senior financial advisor in both roles.
Yes.
The subtlety is the current role is only serving and helping a portfolio of customers. When Mr McDowell met with when Mr Mahadevan met with Mrs McDowell as a senior, he was helping new customers, not serving ongoing advice customers.
So now he serves existing customers,
Existing customers only, yes.
and he provides those existing customers with financial advice.
That's correct.
Thank you. Could I ask that you be shown a document which is WBC 507-001-1206? And this is a letter to Mr Mahadevan offering him a role as a senior financial planner in BT Financial Group. Do you see that in the first few lines, Mr Wright?
Yes, I do.
And Westpac provided this letter of offer to the Commission under a notice to produce, which required Westpac to produce any employment agreement between Westpac and Mr Mahadevan. Are you aware of that?
I'm not sure.
You're not aware of that?
Sorry, could you rephrase that?
Yes, I just want to understand if you know where this document has come from. What I'm putting to you is that it was provided by Westpac to the Commission under a notice to produce. It is not annexed to your statement. It was provided under a notice to produce which required Westpac to produce any employment agreement between Westpac and Mr Mahadevan.
Yes, I agree.
Yes, thank you. I tender this document, Commissioner.
Exhibit 2.103 will be letter to Mahadevan, 7 October 2011. Sorry, that should be letter Westpac to Mahadevan, 7 October 2011, WBC 507-001-1206.
Could I ask that you now be shown RCD 999-0014-0007? And this is a letter that Westpac's lawyers sent to the Commission on Tuesday, on the 17th of April. Have you seen this letter before, Mr Wright?
Do you mind if I just have a quick read of it?
Yes, and perhaps we could have both pages brought up on the screen so you can read the entirety of the letter.
Thank you. Sorry, your question was?
So have you seen this letter before?
No, I haven't.
But you've now read the letter?
I have.
And you can see that in this letter, Westpac's lawyers conveyed to the Commission that the document that I have just tendered, the letter to Mr Mahadevan from the 7th of October 2011 that was provided under the notice to produce, was not in fact the employment agreement between Westpac and Mr Mahadevan, because there was a system automation process that occurred when the document was accessed, which meant that it incorporated Westpac's current terms and conditions and not those in place as at October 2011. And the letter also tells the Commission that Westpac has made further inquiries and undertaken extensive searches to locate the employment agreement provided to Mr Mahadevan in late 2011 relating to his role as a senior financial advisor, but has not located a copy. Westpac has, however, located a draft employment agreement for Mr Mahadevan dated 7 October 2011, which appears on its face to be incomplete. So we see from this letter, Mr Wright, that Westpac cannot find the original letter of offer constituting an employment agreement sent by Westpac to Mr Mahadevan in October 2011. Is that right?
Yes, that's what it says.
Doesn't Westpac keep records of its employment agreements with its financial advisors?
It does.
But you cannot find this one?
Based off what I've just read, no, we can't.
Thank you. I tender this letter, Commissioner.
Exhibit 2.104, letter Westpac solicitors to solicitor assisting Royal Commission, 17 April 2018, RCD 99999900140007.
And could I ask you then to look at WBC 104 0002 1918? Now, this is the draft employment agreement that was provided to the Commission under cover of the letter that I just took you to. And we see from this document, if we treat this as if it is the agreement, which is the best we can do in the situation, we see here that Mr Mahadevan's fixed pay was $97,500 per annum plus superannuation, which led to a total fixed remuneration amount of $106,275 a year. And if we turn to the second page, I'm sorry, let's have the second and the third page on the screen. We see in the final paragraph that the employment arrangements also incorporated accompanying employment terms and conditions which bound Mr Mahadevan. Do you see that? The final paragraph.
Yes, I can.
Yes, thank you. Tender this document, Commissioner.
Draft employment agreement, Mahadevan, 7 October 2011, WBC 104 0002 1918, Exhibit 2.105.
Now, you have annexed to your statement the current terms and conditions of employment for employed financial advisors, Mr Wright?
Yes.
And that is Exhibit MW1-2 to your first witness statement dated the 5th of April, which is WBC 502 001 0007. And do we see if we turn to 0012?
Sorry, what tab was it?
It's tab 2 of your first witness statement. The page is also on the screen, Mr Wright.
Oh, thank you.
We see there that in relation to Mr Mahadeva's remuneration on the first line, in addition to your total fixed remuneration, and I'm sorry, I need to make clear, these are the current terms and conditions of employment.
Yes.
And can I suggest to you first that they are substantially in the same terms as the ones that would have applied to Mr Mahadevan in 2011?
I don't know for sure, but that would be my assumption.
Yes, well, I want to ask you particularly about this paragraph at the top of the page on variable remuneration. The current situation for Westpac employed financial advisors is that in addition to their total fixed remuneration, they can be invited from time to participate in a variable reward scheme. And the details of that scheme are provided at the time that they're invited to participate in the scheme. Now, was it the case in 2011 as well that people in Mr Mahadevan's role as a senior financial planner had a remuneration package which was partially fixed and partially variable based on a variable reward scheme?
I'm not sure, actually.
All right, can I show you the document
Yeah,
as it
please.
was in 2011 to assist you? This is WBC 508 0002 0397. And could I ask you to look at 0400? And ask you to read the section there under variable reward schemes.
Excuse me, Miss Orr, is that dated 2011, is it?
Yes, this is the document that we understand was in force in 2011. I'm just looking for a date within it, Mr Wright.
I can say that it's the policy or the terms effective 18 September 2010. Commissioner, if that helps.
Thank you, Mr Sheehan. Now, what I want to understand, Mr. Wright, is whether it was the case for Mr. Mahadevan in 2011, as it is the case now for employed financial advisors at Westpac, that remuneration consists of a fixed component and a variable component under a rewards scheme.
Yes, it did.
Thank you. I tender that document, Commissioner.
Exhibit 2.106 will be Westpac Financial Consultants Limited employment terms and conditions effective September 2010, WBC 50800020397.
Now, as a senior financial planner, Mr. Mahadevan was invited to participate in the variable reward scheme. That's right, isn't it?
Yes.
And can I ask you to look at WBC 50600200828. This is the participant guide for the financial planner incentive scheme for the period you can see on the front there, 1 October 2014 to 30 September 2015, which covers the period in which Mr. Mahadevan provided the advice to Mr. and Mrs. McDowell.
Yes.
Thank you. And if we turn to 0831, we see that the people who participated in this scheme included senior financial planners, such as Mr. Mahadevan.
That's correct.
What would you say, have you seen this document before, Mr. Wright?
I have.
Yes, and what would you say this scheme is designed to reward?
The scheme is designed to reward the effort that goes into assisting and helping customers.
The effort that goes into assisting and helping customers.
Yes.
Are there any references to that in this document, Mr. Wright?
There will be references to customers.
Yes. Any reference to reward being for the effort that financial planners put into assisting and helping customers?
I'm not sure.
Mm-hmm. Well, can I take you to what the document says it is designed to reward on 0832? The objective of this scheme is to reward for achieving and exceeding performance targets, specifically to reward for value generated, reward for behaviours that support our values, provide high performers with greater variable remuneration, and have a simple framework and calculation method that provides you with clarity on what success looks like and how we will reward you for that success. Do you see that?
I do.
So you see that the first item mentioned as the objectives, in the objectives of the scheme, is to reward for value generated, and all of this is referable to achieving and exceeding performance targets.
That's correct.
Under this scheme, financial planners could earn a monthly bonus, is that right?
That's correct.
And that monthly bonus was calculated as a percentage share of the revenue that they generated.
That is correct.
Yes. Now, apart from meeting a revenue threshold, there were 2 gate openers that financial planners had to open to be eligible for their monthly bonus.
That's correct.
Yes. Can I take you first to 833? And before I come to the reference to the gate openers there, which you'll see partway down the page, can I take you to the top of the page? The monthly incentive earned is calculated as a share of accumulated performance adjusted revenue above the total revenue validation threshold. Any revenue above this threshold is shared depending on role type, and revenue above the high performance target threshold is also shared depending on role type. So that's where we see that this is calculated by reference to revenue brought in. Then if we look at the reference to the gate openers, partway down the page, to be considered for a variable reward payment, you must meet all the gate openers detailed below.
Sorry, could you please go up or down? Sorry.
Oh, I'm sorry, you only have part of the page. Would you like to see
I'd like to see 1 and 2
Yes?
and 3.
If we could have the whole page on the screen, I think
Thank
that
you.
might assist Mr. Wright.
Thank you.
Did you have this on the screen before when I read from the first paragraph at the
I
top?
did.
Thank you. Now, you wanted to have a look at the paragraph in between that paragraph and the gate openers section, is that right?
Yes, the one you're referring to?
I'm referring to the gate openers
apologies.
reference. So the gate openers are listed in the table there. Do we see that?
Yes.
And there are 2 gate openers, living the values and operational risk and compliance. And to open the living the values gate opener, you have to achieve a behaviour rating of 2 or 3. And to open the operational risk and compliance gate, you have to meet the operational risk and compliance objectives detailed in your remuneration and benefits policy.
That is correct.
So once an advisor has satisfied the gate openers, they're then eligible for a monthly bonus, and the amount of the monthly bonus has nothing to do with the gate openers. It's determined according to the revenue that they have brought in.
That's correct.
Thank you. I'll tender this document, Commissioner.
Exhibit 2.107 will be Financial Planner Incentive Scheme Participant Guide, October 14 to September 15, WBC 50600020828.
Could I ask you now to look at WBC 500 024 7371? This is the Remuneration and Benefits Policy and Financial Incentives Payment Plan that again would have been in place at the time of Mr Mahadevan's advice. It's dated the 1st of April 2015.
Yes.
And this again is a document that applied to senior financial planners such as Mr Mahadevan.
Yes, that's my understanding.
And this document gives us some more detail about the components of the scheme that we just saw in the participant guide, is that right?
That's right.
And if we turn to 7384, we see a section headed Reward Calculation. Do you see there that the monthly incentive earned is calculated as a share of accumulated revenue above the total revenue validation threshold? Any revenue above this threshold is shared at 20%, applied for all planners. Revenue above the HPT, that was the high performance target threshold, is shared depending on role type. And we see there a reference to AFP. What is an AFP?
Advanced financial
An
planner.
advanced financial planner, and an SFP is a senior financial planner.
Correct.
So the senior financial planner gets 40% above the HPT threshold.
Correct.
So as a senior financial planner, if Mr Mahadevan generated revenue above a target revenue hurdle, he got 20% of the revenue generated above that hurdle as a monthly bonus. This is the first hurdle, the total revenue validation threshold. But if he earned more, if he generated revenue above the high performance target hurdle, then his monthly bonus went up to a 40% share of the revenue generated above that higher hurdle. Is that right? And the percentage share could be dialed up even further. Is that right?
It can.
Yes, and if we see on this, at paragraph 5 on this page, the reference to dial up and dial down, is it right that the 20%, this is something you deal with in your statement, Mr Wright, that the 20% could be dialed up to 24% and the 40% could be dialed up to 44% in certain circumstances?
That's correct.
Thank you. Now, can we, first I'll tender that document, Commissioner.
Sorry, to be clear, I should have stated also, it can be dialed down
Yes,
by 4%.
yes. So it can go up or down,
Yes.
but it can go up as far as 44%.
Yes.
The monthly bonus can be as much as 44% of the revenue brought in by the financial advisor.
Correct.
Thank you.
The document Bank Financial Planners Remuneration and Benefits Financial Incentives Payment Plan of April 2015 will be Exhibit 2.108. That's document WBC 500 024 7371.
Now, before we leave that document, could I ask you to look at 7381? I just want to ask you some questions about how those targets are calculated. We see on 7381 a reference to the first hurdle or target, which is the total revenue validation threshold. And you see there that that's determined by applying a multiplier to the planner's base salary plus super.
Yes, sir.
So that's how the first hurdle is calculated. And then if we go over the page to 7382, we see that the second hurdle or target, the high performance target, is set by the business from time to time to reflect the revenue plan of the business. Do you see that in the first paragraph on that page?
I do.
So the upshot of all of this is that financial advisors such as Mr Mahadevan were rewarded with a monthly bonus based on the amount of money that they generated for the business, and the more money they generated for the business, the greater their monthly bonus.
That's correct.
And the money that they generated for the business included money from customers, like upfront and ongoing advice fees. Is that right?
That's correct.
And it also included money from product providers, such as commissions from insurance policies.
That's correct.
That was all counted as part of the revenue from which the monthly bonus was calculated.
Yes.
Now, can we just come back to the concept of the gate openers before we leave these documents? At 7371, I'm sorry, 7379, my mistake. We see that there are 3 prerequisites for participating in the program there. Do you see that, Mr Wright?
I do.
And the 3 prerequisites include, the third one is what we've just been speaking about. It's achieving the total revenue validation threshold. So that's about achieving the first target for generation of revenue. And the second is the quality advice gate opener. And this related to the rating that the advisor received based on consequence management points. Is that right?
Yes, it was their risk rating.
Yes. And so a financial advisor needed to receive a rating of normal for the gate to open for the following month's payment. Is that right?
It's not 100% right. After normal, there's 2 other risk ratings.
Yes.
If they were deemed mandated improvement, which is our lowest,
Yes.
then the bonus payment would be stopped for at least 2 months, and it could be
Yes.
longer.
And this is referred to in the final paragraph on this page, Mr Wright, under how the QAGO works. So there's a reference there to the 3 different ratings that a financial advisor could receive. If they receive normal, then the gate opens.
Correct.
But if they receive oversight or mandated improvement, they're the 3 possibilities, aren't they? Normal, oversight or mandated improvement. If they receive either of those last 2, then their monthly bonus is deferred for a minimum of 2 months, and in some cases can be cancelled.
Correct.
Thank you. And the final gate opener is this behaviour gate opener living the values rating. Now, at 7382, we see some further explanation of this gate opener. It related to a behaviour rating, is that right?
That's correct.
So you needed a behaviour rating of 2 or 3 for this gate to open.
That's correct.
And the ratings were only 1, 2 or 3. They were the options.
Yes, that's correct.
So it was only the behaviour rating of 1 that meant the gate didn't open.
That's
Is that
correct.
right? And was it common for financial advisors to receive a behaviour rating of 1?
No, it's not.
Thank you. All right. Can we turn then to the consequence management policy, Mr. Wright, which is WBC 10400215552. The document that I'm having brought up is dated the 25th of February 2015. So again, a version of this policy that was in place at the time of Mr. Mahadevan's advice. And this document, when it comes up, gives us information about the consequence management system that was in place at Westpac at this time for financial advisors.
Yes.
Are you familiar with that system?
I am.
Yes. And under that system, you may be able to answer these questions without reference to this document while it's being found, but under that system, sorry, this doesn't look to be it, does it? That's not it. I'm sorry, I'll repeat the number. It's WBC 500-012-8550. Apologise if I gave an incorrect number. But under this system, a financial advisor starts with 60 points. Is that right?
That's correct.
Mm-hmm. And then they receive demerit points for non-compliant activities. And it's the balance of the points that are left that determines what rating they get.
That's correct.
Is that right? And that rating is what we saw before. It's normal, oversight and mandated improvement are the options.
Correct.
And I just want to show you a part of this document to see how many points you needed to have for each of those ratings. So I'll just have to wait a moment to pull up WBC 500-012-8550. Aha, we have it. Thank you. So this is the document that I referred to earlier, Mr. Wright. Can I ask you to look at the second page, 8551? And you'll see there under how is my rating determined, points balance at any time, what we've just been discussing, that you start with 60 points as a financial advisor. And there's a rating scale that ranges from normal to mandated improvement. And if you have 31 to 60 points, you are rated normal. And if you have 16 to 30 points, you are rated oversight. And 0 to 16 points, you're rated mandated improvement.
That's correct.
And we also see from this document that demerit points continue to apply for 6 months, after which the points will be removed. Do you see that in the second paragraph under the table there, Mr. Wright?
I do. The only qualification, I would say they're not removed. They still remain in our system. And if you see the next paragraph, total demerit points applied over 12 months. Mm-hmm. There's also another lens over a 12-month period.
Mm-hmm. I'm just using the language of the document though,
Yes.
Mr. Wright. The document says that the points will be removed. The documents are, the points are restored to the advisor at the end of 6 months, are they not? So if you have had demerit points applied that take you below 60 points, they are wiped clean at the end of 6 months. So you get back up to the 60 points.
Yes, for the calculation of your risk
Rating.
Yeah.
Yes, thank
Yes.
you. And what you were pointing out is that they have some other effect over the annual period referred to in the paragraph at the bottom of this page. Now, can I ask you just to look at 8553 so we get a sense of how many points get deducted for certain events? And we see there that 3 demerit points are applied if a file is rated as qualified at a compliance audit, and 10 demerit points are allocated if a file is rated requires improvement at a compliance audit.
Yes.
And there are 10 demerit points applied if there's a complaint and the advisor's found to be at fault and the compensation's less than $25,000.
Yes,
And-
that's correct.
And 15 demerit points if there's a complaint and the advisor's found to be at fault and the compensation is more than $25,000.
Yes.
So I want to make sure I understand this. You have 60 points, and if there is a complaint made about you which is finalised and you are found to be at fault and compensation is made of $25,000 or more as a result of your conduct, you only lose 15 points from your 60 points.
That's correct.
Which would, as we saw from 8551, if we go back to that page, perhaps we can have both on the screen at once, 8551 and 8553, the loss of 15 points would still place you in the normal rating category.
Correct.
So the gate would still be opened for your monthly bonus.
Yes, it would be.
Thank you. Attend to that document, Commissioner.
WBC Consequence Management Policy, 25 February 2015, WBC 500 012 8550 as Exhibit 2.109.
Having gone through those documents, Mr. Wright, I want to turn now to the advice that Mr. Mahadevan gave to Mr. and Mrs. McDowell in 2015. And you heard the evidence from Mrs. McDowell that in 2015 she contacted a Westpac branch looking for financial advice. And we know from documents annexed to your statement that the branch manager at Westpac's Eden Rise branch in Berwick referred Mr. and Mrs. McDowell to Mr. Mahadevan.
Yes, that's correct.
Yes. And can I ask you to look at Exhibit 2.4, which is in your second statement, the statement that deals with Mr. Mahadevan, WBC 503 001 1330. We see there the email that the branch manager sent to Mr. Mahadevan about the contact from Mrs. McDowell.
Yes, I see that.
You see the email at the bottom of the page on the 20th of April. Hi Carl, I have a customer interested in buying a B&B for, that this appears to be a typo. I want to suggest to you that the exclamation mark, which appears above the number 1 on a keyboard, should be 1. In buying a B&B for 1.4 mil, wants to talk with someone ASAP. Is this something you can do, or do I need to refer them to a LBB? What is an LBB?
A local business banker.
Yes, and they would like to use their super to support investment.
That's
you see
correct.
that reference there? And you've heard the evidence that following this there was a meeting on the 29th of April 2015 between the McDowells and Mr. Mahadevan that Mr. I'm not sure how to say his name, Mr. Sleeman, thank you, that Mr. Sleeman also attended. There is a file note of that meeting attached to your statement, which is the 5th exhibit to your statement, WBC 503 001 1375. This is Mr. Mahadevan's file note of that first meeting.
Yes, it is.
Yes, and we see from the second sentence there that Mr. Mahadevan records that the McDowells advised him that they need help in establishing an SMSF as they plan to buy a direct property soon to run a B&B business. And
So do you mind if I use paper?
no, not at all, not at all, Mr. Wright. You're looking for this in your folder?
Yeah.
Tab 5.
Thank you. Doesn't seem to match my tab 5. Thanks.
Thank you, that's helpful to have that
Thank
blown
you.
up. Now, we see further down in that first paragraph, on the 6th line down, Mr. Mahadevan records, they have been planning to do this business for quite some time and they have accumulated more than 200,000 in their super, which they wish to use in their SMSF to then borrow and buy a direct property at a later date to run this business. And if we go further down in that paragraph towards the bottom, we see Mr. Mahadevan's reference to introducing Carl Sleeman to Jacqueline and Hugh and discussing with him their plan to purchase a direct property within SMSF by using borrowed monies in future. You see that?
I do.
And then in the second paragraph, about halfway down, we see a reference to a discussion about personal insurances. About halfway through that paragraph.
And the sentence starts with
Also discussed regarding personal insurances. And a few lines down, we see a reference to $1 million of life cover and $150,000 for TPD and trauma only, as they advise me that $1 million for life cover should be sufficient to manage their debts in a significant event of death, and $150,000 for TPD and trauma along with income protection will be sufficient to take care of their lifestyle and any medical expenses in an unforeseen event of disability or specified trauma. Does this suggest to you that Mr Mahadevan asked the McDowells to consider insurances at a greater value, and that they said that $1 million and $150,000 was enough for them?
No, it doesn't.
Okay. So, having made this file note of the meeting on the 29th of April, Mr Mahadevan completes the customer profile booklet that Mrs McDowell referred to in her evidence. You've also annexed that to your statement at Exhibit 1. WBC 503-003-0903.
Yes, thank you.
And you would have heard the evidence earlier that Mrs McDowell gave about this document reflecting the information that she and her husband gave Mr Mahadevan about their assets, about their liabilities, about their superannuation balances and about their insurance.
I did.
Thank you. Now, the liabilities that are disclosed in this document at page 90919 I'll just ask you to do some quick maths and accept that the liabilities that the McDowells had came to $488,000.
Yes, I agree.
And there was just over $200,000 in superannuation that you can see from the table at the bottom of this page.
Yes, I agree.
And you heard the evidence about the information at 0922 about not only the insurance policies that they had in place, but the amount of coverage they had under each of those policies.
Yes, I did.
After this document is provided, you heard the evidence that there is a second meeting at which a statement of advice is provided.
Yes.
And you've annexed that statement of advice at the second tab of your statement, which is WBC 503-003-1148. And you heard the evidence about the recommendations made in this document. There were two recommendations to establish a self-managed superannuation fund, to roll over the existing superannuation into that self-managed superannuation fund, and there were also various recommendations in relation to insurance cover.
Yes.
Now, there's no mention in this statement of advice, is there, of the purpose of the insurance cover, which was to cover the debt for the bed and breakfast if something happened to Mr and Mrs McDowell.
I apologise for stalling. I'm just not 100% sure that it's not in the 60 pages.
Well, let me put this to you. There's nothing in the statement of advice about the possibility that Mr and Mrs McDowell could have deferred taking out the new policies until they had purchased the bed and breakfast and incurred the debt that the insurance was designed to protect.
Yes, I agree.
And what do you say about that? Was that something that should have been discussed in the statement of advice? Is that an option that should have been given to them?
What I say is, as I've said in my statement, this is poor advice. It should have been covered, and it wasn't, and it had significant impact.
In what way was this poor advice, Mr Wright?
In my view, reading the material, and I've got the luxury of reviewing all this material over the last 3 years, it's very clear that this was not a viable strategy for the McDowells, and I'm sure the McDowells were passionate and excited about what their future could look like, but the reality was it wasn't viable. And at that point in time, as professionals, as Mrs. McDowell stated, we should have made it very clear, this is not viable. It was poor advice.
Mm-hmm. Are there any other ways in which this advice was poor advice?
For me, that was the fundamental issue, the overarching issue. I think if Mr. Mahadevan had spoken about the possibility and given the McDowells alternatives right in that first meeting, had offered to do some cash flow analysis, what if scenarios, and help them see that maybe this is not viable as much as you want it.
What about the insurance recommendations, Mr. Wright? What do you say about those?
The insurance recommendations in relation to purchasing the B&B, potentially going into debt, I think that is reasonable. The reality, though, is, Miss Orr, this advice is poor. This strategy was not right. Therefore, by default, there shouldn't have been a need to set up the self-managed super fund. That wasn't viable. Therefore, by default, we shouldn't have set up the insurance. It wasn't viable.
And even if those things were not the case, even if it had been viable at that point, do you accept that on top of that, no insurance policies of this size should have been entered into until the debt had been incurred?
Reading through the material, I think it's obvious that we should make it very clear that if this is something you want to continue with, there is no need to put the insurance in place until you purchase the property. Now, reading through the material, there was conversations that it would be good to have it in place because then we've got one of the elements of the strategy completed. I'd wish that we deferred and waited.
Yes, one element of the strategy
Yep.
that was never going to be viable. Do you agree with that?
I agree with that.
Yes. And this advice was advice that Mr. Mahadevan charged the McDowells $5,280 to prepare and implement. You heard the evidence about that before, and I can show you the page if it assists, which is 1170. And on top of that, there was the fee of almost $4,000 to establish the self-managed superannuation fund. Do you have anything to say about that?
The administration costs for a self-managed super fund.
No, about the entirety of the money paid by Mr. and Mrs. McDowell for what you have described as poor advice.
Yes, sorry, I was going to start with the administration. That is a reasonable market rate. It is. In terms of the advice preparation, let's assuming this was good advice, then that is not an unreasonable charge to prepare a statement of advice and the time it takes. But with hindsight, this is poor advice and therefore these charges don't make sense.
What about the $3,000 for the ongoing advice? What was that for?
That was to enter into an ongoing advice relationship with Mr. Mahadevan to assist the McDowells achieve and reach their financial goals, which Mrs. McDowell made very clear was to retire in her own B&B, to work in it, and the intent was to assist.
How? What further assistance would they require on an ongoing annual basis?
It's a complex system, our financial services system, particularly superannuation. The intent is around keeping people like Mrs. McDowell and her husband informed of changes. Their needs may change. There may be need for more advice. Having an advisor to help and reassure you to achieve your goals, that is the purpose of ongoing advice.
But the goal here was to acquire the bed and breakfast.
Yes, sorry for not being clear. The ongoing cost that you asked about is the charge that would be paid after the initial advice to help them realise their dreams over the journey.
Realise what dreams over the journey, Mr. Wright? I just want to make sure I understand this.
Of course. The dreams that Mrs McDowell shared with us today.
Yes, but weren't those dreams about the acquisition of a bed and breakfast that she could operate in retirement?
What I heard was at that point in time, yes, but the end game, whenever that was going to be in the early 60s, was to have a property that she could manage, she could retire comfortably, that she could live the life that she wanted to. That's what I heard.
Yes, and so what I want to understand is what Mr. Mahadevan was going to do on an annual basis for $3,000 and where we see any record of that in this statement of advice that was provided to the McDowells.
The fee for the ongoing advice is that to reassure annually that they're on track to realising their dreams, which I just mentioned. As I said, it's a complex environment. It changes constantly. Ongoing relationship and advice.
I see, but there were going to be ongoing fees in connection with the maintenance of the self-managed superannuation fund paid to Heffron, is that right?
I'm not sure about Heffron.
Okay, but you maintain, do you, that there was something more that the McDowells needed from Mr. Mahadevan on an annual basis after they acquired the bed and breakfast that was worth $3,000 a year?
I don't know the McDowells personally, but there's lots of Australians that want the constant reassurance in a very complex system that they're going to hit what they've planned to hit. I don't see that as unreasonable.
I see. And what do you say to Mrs. McDowell's evidence that she didn't understand what this $3,000 was for and it wasn't explained to her?
I was very disappointed to hear that. Clearly, Mrs. McDowell has the right to understand what she's getting into. I've got no reason to doubt Mrs. McDowell's comments, and that was very disappointing to hear.
All right. Perhaps we could break there, Commissioner.
Yes, 2 p.m. So,
Mr. Wright, I had been asking you some questions about the statement of advice that Mr. Mahadevan provided the McDowells.
Yes.
If we could have that brought back up, and if I could have you shown WBC 503-003-1172, which is the other payments page of the statement of advice, Mr. Wright. And you see there, and you've heard evidence about already, the upfront commissions that Westpac received as a result of this advice being in the sum of $27,180.
This is a recommendation. This amount of advice wasn't actually implemented.
So what wasn't implemented, Mr. Wright?
On the meeting on the 2nd of June, Mr. Mahadevan had a conversation with the McDougalls, and they decided, based off this recommendation, to extend their waiting period on their life cover from 30 days to 90 days. And that significantly reduced the overall cost by 40%, close to $16,000.
So what were the total upfront commissions that Westpac received as a result of the implementation of Mr. Mahadevan's advice?
So it would have been the 16,000 by 110%. I don't know what that number is, but
17.6.
sorry.
17.6.
Thank you. In terms of the upfront, that's what it would have been, yes.
Yes, so $17,600 in upfront commissions as a result of the implementation of this advice.
Yes.
A significant amount of commissions for Westpac
Yes.
that resulted from a recommendation to move from insurance policies covered by existing industry super funds into a suite of Westpac only insurance policies.
Yes.
And we see on this page as well that this advice, if accepted, would have contributed to Mr Mahadevan's share of revenue for the assessment of his monthly bonus. Do you see that under the heading paid by Westpac to others?
I do.
And you see over in the right-hand column, method of calculation, it would contribute $37,931 towards his total revenue. And if he exceeded his target revenue threshold, he would get 24% of that as a monthly bonus based on the policies we've looked at earlier today. And if he exceeded his high performance target, he'd get 44% of that amount as a monthly bonus, which is the figure we see in the left-hand column of $16,690. Is that right?
That is possible.
Well, that's what this document says, isn't it?
No, it says to me, under type of payment, possible plan a share of revenue to Krish up to 44%.
Yes, so it was contingent on him meeting those revenue thresholds, as I just articulated to you. But if he did, if he reached the higher revenue threshold, he would get 44% of the $37,931, which would give him $16,690 towards his monthly bonus.
And assuming that he received the extra 4% for the modifiers, and assuming that amount was all above high performance target,
That's right.
then yes, it is possible.
Well, those assumptions are built into this possibility in
Yes.
the document, aren't they? So I assume it's framed this way because this is the maximum amount that he could receive if he not only beat the first target, but beat the second target, and then it was dialed up from the 40 to the 44% as well. He'd end up with $16,690.
Over a period of 13 months.
What do you mean by over a period of 13 months?
This is very confusing. The reality is we've tried to be as prudent as possible. So if you look to the table above on the far right, it talks about the ongoing trail that we
Yes.
would receive, I suppose, at the 13-month mark.
Yes?
That amount is also included into that fee calculation, and 44% is applied, including also the plan fee right at the front of
So all of that's built in, and that's what we see under the heading paid by Westpac to others.
Yes.
Yes. And did Mr Mahadevan end up with a monthly bonus following the implementation of this advice?
Mr Mahadevan received a monthly bonus, and an amount of this did contribute to that, yes.
Yes. And do you know what amount?
So this advice was provided in June, once the McDowells had signed the authority to proceed with the reduced risk amounts. Obviously they go into the underwriting process. My understanding is that in the September statement, which would have been the August payments, there was one component of the insurance that came through,
Yes.
and then there was a second component in the October statement that came through in the September.
Right. So the implementation of this advice contributed to his bonuses in September and October. Is that right?
It contributed to his bonus in September. There was no bonus in October.
I see. And do you know what amount of his September bonus is attributable to the implementation of this advice?
Yes, I have estimated that.
Yes. And what is it?
It was indicatively 16,000, I do apologise, 16% of the amount that came in, which I think was around about 9,000. So, $2,500 to $3,000.
And were there further amounts that came in as a result of the implementation of this advice later?
Yes, the following month there was another amount paid into the performance account. However, Mr Mahadevan in that month hadn't reached his validation threshold.
I see. I see. Can I take you to another document, Mr Wright, which is WBC 506-001-0160. Have you seen this document before, Mr. Wright?
I have.
And this is Westpac's best interest duty policy, is that right?
Correct.
And this was in force from the 1st of July 2013?
That's correct.
Yes, and we can see that from the second page in the document. So this, do you see there, effective 1 July 2013?
Yes.
So this is an internal policy, is it, that Westpac has to assist financial advisors with compliance with their statutory duty to act in the best interests of their clients?
It is.
Yes. And there is still a policy of this sort, is there?
Yes, there is.
Yes. And is the policy different in any substantive way to this policy?
No, it isn't.
Thank you. Could I ask you to look at 0166 in that document? And do we see there in the, I'm sorry. Yes, we need, thank you. Perhaps we could have 165 and 166 on the screen next to each other. You're familiar with this document, Mr. Wright?
I am.
Do you understand that it sets out a series of steps for financial advisors to assist them in ensuring in complying with their best interest duty?
It does.
And are you familiar with step 7?
I am.
Take any other step that at the time the advice is provided you consider would be regarded as being in the best interests of the customer, given the customer's relevant circumstances. And you see there in the right column, you should consider 2 questions. 1, is there anything particular to the customer's circumstances that would reasonably require me to do or say something different or further, including explaining something to the customer, asking additional questions, or warning of certain risks or limitations? Did Mr. Mahadevan comply with this policy? Mr. Wright?
Based off what I've reviewed, it's difficult for me to say exactly. However, my point right at the start, this advice was poor. Some of those themes that you point to here are questions that should have been asked, may have been asked, but there is no evidence that they were asked.
Well, your own policy required your advisors, Mr. Wright, to consider whether there was anything about the client's circumstances that required action on the part of the financial advisor. And the reality is there was here, wasn't there? This was a client seeking advice on a strategy which you have acknowledged was not viable. And this policy required Mr. Mahadevan to explain to Mr. and Mrs. McDowell at the first opportunity that their entire strategy was not viable, didn't it?
I agree.
Yes. And do you accept that Mr. Mahadevan did not comply with his statutory duty to act in Mr. and Mrs. McDowell's best interests?
I'm not sure I'm qualified to make that comment. I'm no lawyer. But I stand by what I've looked at. This is poor advice. I'm not qualified to say whether.
Well, let's forget about the legal construct. Do you regard the advice that Mr. Mahadevan gave to the McDowells as being in their best interests?
As I said, it was not good advice. It was poor advice by default. It was not in the McDowell's best interest.
Thank you. Now, what I want to put to you is that Mr. Mahadevan acted in his own interests here by giving advice about how to implement an unrealistic strategy, because that advice, if implemented, increased his share of revenue.
Sorry, the question is?
The question is, do you accept that instead of acting in the best interests of Mr. and Mrs. McDowell, Mr. Mahadevan acted in his own interests by providing advice that was designed to increase his share of revenue and therefore his monthly bonus?
No, I don't.
And why do you not accept that?
There's a couple of reasons. The first one is it was clear that the McDowells were very keen to put in place their the self-managed super fund to then purchase the B&B.
Mhm.
The cover wasn't at an unreasonable level, and then I think in the conversation on June 2nd, to have a richer conversation and to reduce with the McDowells together the premiums by 40%, infers to me there was a very two-way conversation. So that's probably the first point. The second point is Krish and advisors in BT and the industry are very aware that if the insurance is put in place and it doesn't, it's not deemed to be affordable or appropriate within 12 months, it's clawed back. And clearly, if Krish felt that there was no intent, or sorry, there was no way that the purchase would happen, then it would have been clawed back in total. And the last one is, obviously I've had a good look at the performance statements and it certainly doesn't show that.
The performance statements don't show what, Mr. Wright?
Your premise was this was done for maximising share of revenue. Reviewing the performance statements for the 12-month for Mr. Mahadevan doesn't suggest that to me.
So he might not have been successful in his strategy to increase his share of revenue, but what I'm putting to you is that that was the strategy that sat behind the advice that you have told us is poor advice.
I disagree with that.
Do you resile from your acknowledgement that this is poor advice?
No, I don't.
Thank you. Mr. Mahadevan, did he prepare the statement of advice himself?
No, this would have been prepared by our paraplanning team.
Yes. And what do paraplanners do?
Paraplanner's job is in essence to create an advice document like the one we saw based off information that comes from an advisor.
And we've heard a bit about paraplanners through other witnesses already. The use of paraplanners is common in the financial advice industry.
Yes, it is.
Thank you. And does Westpac require its financial advisors to use the services of paraplanners?
In the salary channel, yes, paraplanning is mandated.
And why is that?
In 2014, there was an array of controls put in place, preventative and detective. Paraplanning, the mandating of paraplanning was one of the cornerstone preventative controls.
And how does that work? How is paraplanning understood to be a preventative control?
It's preventative in the sense that the request for the statement of advice is generated before it's presented to the customer. So if the request from the advisor is flawed or there's insufficient information, then the paraplanner's job is not just to produce the document, is to add value in the conversation to make sure it's going to be appropriate for the customer.
And in that way, the paraplanners represent a cornerstone, you said, of your preventative controls?
Yes.
Thank you. Can I ask you to look at Exhibit 41 to this second statement, which is WBC 503-003-1200. Thank you. Now, this is an email chain that we have here, Mr. Wright, between Mr. Mahadevan and a paraplanner within Westpac. And if we go to the back of that email chain and see how it starts, on 1201, we see an email from a paraplanner to Mr. Mahadevan on the 26th of May 2015, so this is prior to the finalisation of the statement of advice. Hi Krish, thank you for your statement of advice submission for the above mentioned customer. Could you please address the following questions? Now, before I come to these questions, what would Mr. Mahadevan have submitted to the paraplanner?
So Mr Mahadevan would have submitted a paraplanning request form that would have all the information that you would expect. The signed customer profile booklet, which we saw a little earlier.
Yes.
The risk profiling document. It would also, as a part of the template, have some text around the strategy. The reason why that's important is obviously the paraplanner doesn't meet the customer and they're reliant on what's provided.
So we see here that this paraplanner had a number of questions for Mr Mahadevan about this advice, and the way this email appears to work is we have the paraplanner's questions in the left-hand column and Mr Mahadevan's response to those questions in the right-hand column. So can we start with the first question the paraplanner posed to Mr Mahadevan? The OAS fee, what is the OAS fee?
Ongoing advice.
The ongoing advice service, or is the S?
Service,
yes.
yeah.
The ongoing advice service fee charged is way too high for a Navigate review package. Please either reduce the fee to $2,200 or upgrade the ongoing advice service to a Navigate Focus package. And Mr Mahadevan's response? The ongoing advice service fee is charged based on the complexity, as this involves SMSF. The Navigate review package is appropriate for their current situation. So, Mr Mahadevan did not accept the concern raised by the paraplanner and overrode it.
He did, yes.
Thank you. Then can we look at the third question raised by the paraplanner here, alternative strategy. Have you considered to delay the establishment of the SMSF until a B&B property is found? There are a lot of fees in related to establishing an SMSF, so if they can't find a property to buy, you never know, then this SMSF will be established for nothing. The required insurances can be established via a master trust. Have you considered to set up the insurances after the property is found, so we can do a full insurance needs analysis to cover both their personal needs and the loan within the SMSF? When they do find the property to buy, they will have to consider covering the debt anyway. The recommended insurances is costing $22,524 per annum inside the self-managed super fund, which is a big chunk of the $200,000 balance. If they are considering to buy a property down the track, this large insurance premium may affect their ability to service the loan. They could make additional contributions to super to service the loan, but they haven't got much surplus funds outside super at all. This is another reason why they should consider the insurance after the property is found and review the whole situation together to ensure the whole thing, buying a property and getting cover, works without any cash flow issue within the SMSF. So this was the concern, another concern raised by the paraplanner, and we see Mr Mahadevan's response. Yes, I have considered this alternative and discussed with clients, but they want to establish and have the monies in their SMSF as they want to invest in direct property to establish B&B if they cannot buy the business directly. Yes, we will recommend them to review their personal insurances once they buy the property. However, at this stage, they want advice on the insurances as per their specific needs requested by them, as they are confident the amounts of insurances they have requested will be sufficient to manage their debts and fund part of any medical expenses as per CPB. CPB, the
Customer profile
the booklet.
Yeah.
Yes, I will be definitely discussing this issue during my plan presentation, but I cannot present a plan without the insurances they have requested for and the cost for the same. So we see here various concerns, significant concerns raised by the paraplanner with Mr Mahadevan about this advice, each of which was overridden by Mr Mahadevan. Do you agree?
I would agree.
Yes. So the cornerstone of your preventative controls, paraplanning, can be easily, and was here, circumvented.
No, I wouldn't say easily. That it's a complex system with the advisor having the conversation with the customer, many actually, not the paraplanner. Karen's done a great job here adding value in what needs to be considered. I think there is a missing piece though. Yeah, The point for me has always been, was this strategy viable?
That's right, and we've accepted it wasn't, haven't we?
And that would have also been a good question raised here as well.
Right. So that's another thing the paraplanner could have raised but didn't raise. But the things that she did raise were all overridden by Mr Mahadevan, and he proceeded with the advice irrespective of the paraplanner's views.
Yes, he did.
And what I'm putting to you is that therefore the cornerstone of your preventative controls is not effective, because a financial advisor can reject the views of the paraplanner and proceed in any event.
Respectfully, I would disagree with that. We have escalation processes in for a paraplanner and for their leader, which is a part of the exhibits. It can't be easily circumvented.
Well, it was here, wasn't it, Mr Wright? None of these points made by the paraplanner resulted in any changes to the advice that was provided to Mr and Mrs McDowell.
I agree with that.
Thank you. Now, around the time that all of this was going on, in July 2015, so you'll recall that the second meeting was in June 2015 to present the statement of advice. On the 6th of July 2015, Westpac received a notice from ASIC under Section 912C of the Corporations Act, requiring Westpac to give ASIC information about financial advisors whose conduct had given rise to compliance concerns. You deal with this in paragraph 31 of your statement, and Westpac responded to that notice on the 27th of July 2015.
Yes.
Now, you didn't annex to your statement a copy of the response by Westpac to ASIC's notice, but I'll show it to you. It's WBC 507-003-1303. So this is the response to the request from ASIC for information that Westpac received on the 6th of July 2015.
Yes.
And we see from the first page there that Westpac provided ASIC with a list of advisors whose conduct had given rise to serious compliance concerns, and a list of advisors whose conduct had given rise to other compliance concerns.
Yes.
Yes. And Westpac included Mr Mahadevan in the list of advisors whose conduct had given rise to other compliance concerns, didn't they?
Yes.
Thank you. And Westpac identified 2 instances of Mr Mahadevan's conduct in this letter.
Sorry, in this letter or the attached spreadsheet that went?
In the letter itself. So I'll take you
Please
to
read that.
1305 of the letter. Mr Mahadevan is not named in these paragraphs, but when we read these paragraphs together with paragraph 32 of your statement, it's clear that the instances referred to in paragraphs 8A and 8C of this letter both relate to Mr Mahadevan. Would you like to look at paragraph 32 of your statement to satisfy yourself of
Yes,
that,
please.
Mr Wright? Yes,
Thank
paragraph 32 it is. Am I right, Mr Wright, that the instances described in paragraphs 8A and 8C relate to Mr Mahadevan?
Apologies, I'm just still reading that. So C, yes, in terms of, so C, yes.
Yes. And A?
And A, yes.
Thank you. And one of these instances related to a case where Mr Mahadevan had charged an ongoing advice fee without providing ongoing advice.
Yes.
And you tell us in your statement, it's not in this letter, but you tell us at paragraph 32 of your statement that Westpac had to pay that customer $2,213 in compensation as a result of that.
Yes.
And the other instance that you disclosed to ASIC about Mr Mahadevan in this letter in July 2015 related to the cost of a life insurance policy.
Yes.
And you tell us again in your statement that this customer also needed to be paid compensation as a result of Mr Mahadevan's conduct, and that customer was repaid $792 as a result of that.
Yes, we repaid that staff member.
So at the time that this advice was being given and implemented, Westpac knew and was disclosing to ASIC that Mr Mahadevan had previously engaged in conduct that involved not providing an ongoing service under an ongoing service arrangement and for issues in relation to the cost of life insurance policies.
That is correct.
And did the fact that Mr Mahadevan was disclosed by Westpac to ASIC in this correspondence prompt any action from Westpac in relation to Mr Mahadevan?
No, it didn't.
Why not?
As a part of the ASIC notice in mid-July 2015, there was obviously the serious compliance concerns, and then there was the other. My understanding of the other, there was various filters such as we've just gone through, complaints. Some of these complaints were low in terms of outcome. Some of these complaints had no systemic themes, or else they would have been serious. And with the criteria that was supplied to ASIC, Mr Mahadevan was amongst a number of other compliance concerns that we raised with ASIC.
So you had multiple advisors that you were worried about, that you told ASIC about in this letter?
We had multiple advisors based off what ASIC asked for, and that's what we provided.
And these two incidents in relation to Mr Mahadevan, you said resulted from complaints by customers?
Yes.
Yes. But you described them as low in terms of outcome. So do you mean by that you didn't have to pay very much money to these customers to fix things, and therefore this wasn't a big concern for Westpac?
So what I meant was that if we go back to the consequence management framework that you took us through,
Yes.
Below 25,000 had a different consequence than above 25,000, so that's what I meant. The impact for customers, though, could be real and much bigger. I'm aware of the second one being a staff member, and that was a processing error around loading a staff discount and not providing an ongoing advice fee for a customer is unacceptable.
But you didn't look into whether there were further customers sitting behind this other than the two who'd made the complaints?
Not that I'm aware of.
And you didn't increase the monitoring of Mr Mahadevan in any way?
No, we didn't.
And you didn't conduct any review of the advice he'd been providing?
No, we didn't.
All right. So you heard the evidence of Mrs McDowell. Just before I go to that, I need to tender the best interest policy, which was the second last document I referred to, Commissioner. It was dated July 2013 and it was WBC 506-001-0160.
That will be Exhibit 2.110, Best Interest Duty Policy, effective 1 July 13, WBC 506-001-0160.
And could I also tender the letter I have just taken Mr Wright to, the letter from Westpac to ASIC dated the 27th of July 2015?
Exhibit 2.111 will be response to Westpac to ASIC under Section 912C, 27 July 15, WBC 507-003-1303.
Now, you heard the evidence of Mrs McDowell before Mr Wright about the complaint that Mrs McDowell made to Westpac. You're familiar with that complaint?
I am.
And that complaint was assigned to someone within Westpac to investigate?
It was.
And you've annexed some internal correspondence about the handling of that complaint to your statement?
I have.
Yes. Could I ask you to look at Exhibit 11 of that statement, which is WBC 10400373776. This is an email chain describing an investigation into the complaint that was conducted by Ms. Purcell. Is that correct?
Sorry, I don't think I've kept up with you. I do apologise.
I'm sorry, it's Exhibit 11 in your statement, and you'll see it on the screen now as well.
Okay, thank you.
So the first document in the chain is 7373, but I want to start at a point within it, which is where I am, at 7376. Do you see there the email of the 22nd of December 2015 from Ms. Purcell, who was conducting the investigation, to Ms. Hartman?
Yes.
And do you see there that Ms. Purcell tells Ms. Hartman on the 22nd of December that she's typed a summary of the case for your perusal? I believe there are a number of issues with the advice. Overall, I think Krish has put the customers in a worse off position. There is also a credit issue with the information or advice provided by the LBB. I will refer this to the credit complaints area also, but I'd like to get your thoughts on this first. And then can I take you to a later response in this email chain at 7374 to 7375. And underneath the redacted portion on the right, we see Ms. Purcell expressing to Ms. Hartman the view on the 5th of January 2006 that although Travis, to whom the credit issue has been referred, is of the opinion that all information provided by Carl was compliant and correct, she disagrees with that. And then if I could ask you to look at the email on the left-hand side, which is again Ms. Purcell to Ms. Hartman on the 6th of January 2016, and what I want to direct you to there is Ms. Purcell's conclusion immediately after the redacted portion that from her research there isn't any lender in the market that would provide credit for this type of purchase. Mm-hmm. So you accept that these were the views expressed by the person investigating the complaint?
I do.
Do you disagree with those views?
I don't.
Thank you. Now, we've also heard that as a result of this investigation, Westpac decided to make an offer of money, a settlement offer, to Mr. and Mrs. McDowell, and that first offer was made in January 2016, and you deal with that offer in your statement, and we've seen some correspondence about that through Ms. McDowell as well. Once you had got to that point where Westpac had decided to make an offer of compensation as a result of these events to Mr. and Mrs. McDowell, did Westpac take any steps to discipline Mr. Mahadevan or Mr. Sleeman?
I'm not sure.
Well, I want to suggest to you, based on my reading of your statement and all the documents you've annexed, that no step to discipline Mr. Mahadevan or Mr. Sleeman was taken. Nothing was done despite the decision to make an offer of compensation to Mr. and Mrs. McDowell. Do you disagree with that?
No, I don't at that point in time.
Well, at what point in time was something done, Mr. Wright?
So when this complaint was finalised through files and the final outcome was known, and therefore there would be a payment made to the McDowells, there was a couple of things that happened to Krish in terms of consequence, and
yep.
it's more a part of our process. The first one, 15 points of consequence management were applied. Mm-hmm. Secondly, the good value claim that we paid the McDowells, that was contrared against Mr. Mahadevan's total revenue measure.
Yes.
Which will result this year in no bonus for Mr. Mahadevan.
Mm-hmm. So the decision to offer compensation was made in January 2016. What your statement tells us is that you deducted those 15 consequence management points more than 18 months later in October 2017.
That's correct.
Why wait so long to deduct those points?
The system that we have in place around good value claims for customers is to give the advisor at the end of it, if there will be a payment, an opportunity to at least put their case forward, whether they were at fault or not. But it can't happen until the complaint's actually paid. That's our process currently.
Even though you had made the decision that this complaint warranted an offer of compensation?
We had made the decision. At that point in time, Mr Mahadevan may have had a different view and may have wanted to challenge that complaint.
So what about protecting the rest of Mr Mahadevan's clients in the meantime over this 18-month to 2-year period where his consequence managed points were unaffected by this conduct?
You're right. The consequence management points didn't put him on to a higher risk rating.
He stayed at normal the entire time, didn't he?
He did.
And even when you deducted the 15 points in October 2017, he still stayed on normal, didn't he?
He did.
So there were no consequences to him through the use of the consequence management point system.
There wasn't.
And do you think that's sufficient? Do you think that's adequate?
No, I don't.
And have you changed that situation?
Yes, I have.
And how have you changed that, Mr. Wright?
So as I say in my first statement, it's clear that the design of our consequence management program is inadequate. We have done some tactical moves or some early adopting moves. I can't think of the right words. February last year, we increased the points, for example, for a requires improvement audit from 10 to 15. And in December, we doubled that to 30.
So it took until December last year to make sufficient changes so that an event of this nature would yield an adverse rating under the application of the consequence management system.
I wouldn't say sufficient. We've still got more work to do.
I see. And what does that involve? What's next?
So as I said in my first statement, question 6, we are now putting a strategic solution in place around consequence management. The December move was a good move, and we can discuss that maybe after this case. But we still have more work to do around our consequence management program, which we're working on currently at the moment.
And what do you plan to do?
So in essence, the strategic solution will be much more automated. And if I'm going into too much detail, you'll tell me. The solution at the moment only captures, in an automatic sense, audit outcomes and complaint outcomes. There's other instances such as our plan of risk insights, such as investigations, such as inappropriate behaviour that has to be loaded into the system by a regional manager. And one of the big enhancements we'll make as a part of our strategic solution is automating all those things and taking out the human process to get the points loaded in.
And when do you anticipate that system will be operational?
So the intention as a part of our controls environment review program is to have that operational by June 2018.
Is that a realistic intention, Mr. Wright?
My early sense is no. I think it's probably more September.
Thank you. Now,
But is the informing principle still to be a principle of penalising bad conduct rather than rewarding good?
Thank you for that question, Commissioner. One of the things I mentioned in my statement, one, is that we established a professional service council back in 2014, and we have an independent external practitioner sit on that, who sits on the ethics centre. And we went with our approach around consequence management going forward. His steer was that we also need to look at the positive consequence, in the sense that if someone has had incredible compliance outcomes and they've served their customers well, why wouldn't there be potentially a positive component of the consequence management process?
Would you accept that the culture of an organisation is affected by what those at the workface see as being valued by those higher up the chain?
I would.
And would you accept that there is a difference between penalising bad behaviour and rewarding good behaviour?
I do.
That on one point of view, penalising bad behaviour points in the direction of obscuring or hiding the occurrence of what has gone wrong. Is that right?
You potentially rephrase that a little, please?
If you penalise bad behaviour, there is an incentive to cover up.
Mm-hmm.
Would
Yes,
you accept that?
I do.
Yes.
The other step that you referred to in answer to my question about what, if anything, Westpac did to discipline Mr Mahadevan once it had made the offer of compensation, the other thing you referred to was taking from Mr Mahadevan's share of revenue the $107,000, which was the value of the total determination by FOS. Is that right?
That's correct.
And that, I just want to be clear, that's another thing that happened well after the decision to make compensation. That happened about 18 months later after that determination.
That's correct.
Yes. Now, do you know if Mr Mahadevan was a member of a professional association like the Financial Planning Association of Australia or the Association of Financial Advisors?
Recently, I do. All the salaried advisors are members of the Financial Planning Association. I can't quite remember the year that we did that and funded that for all our advisors. I think it was 2015, but it's in my table in Statement 1.
So at the moment you don't know whether at the time of these events Mr Mahadevan was a member of that association?
He could have been. I just can't remember the date that we put that in place.
And let's assume he was. Would that have resulted in a report by Westpac about Mr Mahadevan's conduct to that body?
That wouldn't be my understanding, no.
Why not?
I don't know.
Those bodies have disciplinary powers in relation to financial advisors, don't they?
I'm not sure.
You don't know what the powers of the FPA are?
The industry bodies do not license advisors. The licensees, the dealer groups, do that.
That's right.
I'm just not clear on their disciplinary reach, is probably what I'm trying to say.
Well, why do you require your employed financial advisors to be members of the FPA?
The reason is, as a part of professionalising, so there's the component around education standards and ethics. Another component is being involved and active within an advice association such as the FPA.
So it has nothing to do with the disciplinary powers that are available pursuant to those associations?
That's not my understanding.
Right, I see. So we can assume then that Westpac did not report Mr Mahadevan's conduct to the FPA, whether he was or wasn't a member of that association. If he was, you would not have reported it.
Yes, you could assume that.
And you also didn't report Mr Mahadevan's conduct in relation to Mr and Mrs McDowell to ASIC, did you?
No, we didn't.
And why not?
The process to report an advisor to ASIC involves our second line of defence completing a compliance assessment. That exercise was undertaken. It was determined by the second line of defence that there was no systemic issues. In their view, there potentially wasn't a breach and it wasn't significant within the parameters that they worked through, and therefore it wasn't raised with the breach determination forum.
So you're talking about a report under Section 912D of the Corporations Act there, are you? When you're talking about whether it was systemic, I assume that's directed to whether it required a report to ASIC under that provision.
No, again, I'm not qualified, but my conversations and research in terms of forming this statement, that is what I was told.
Well, was this conduct a serious compliance concern or an other compliance concern as those terms are used by ASIC?
Again, I'm not sure what the definition of serious is. I was told that the other included if there was a complaint.
Yes.
Um,
And are you aware that the other compliance concern definition from ASIC also includes circumstances where customers suffer loss as a result of the conduct?
no, I wasn't.
But you accept that loss was suffered as a result of this conduct?
Yes, I do.
And on that basis, do you accept that this was a compliance concern that ought to have been reported to ASIC?
Again, I'm not qualified. I don't make that decision. What I am qualified on is the quality of this advice, and it was poor.
The quality of the advice, did you say?
Yes.
But what I'm trying to ask you questions about is what was done in response to the poor quality of this advice,
Yep.
Mr. Wright. There was no report to ASIC. There was no report to any professional association. There was no disciplinary measure taken in relation to Mr. Mahadevan. What happened? What did Westpac do once it worked out that this poor quality advice had been given to ensure that it not be given again and to impose consequences on Mr. Mahadevan for having given it in the first place?
So I won't re-mention the consequences which were applied 18 months down the track.
Yes.
Reading the file, what I sense is it was deemed that this was a once-off issue. I have no doubt Mrs. McDowell knows exactly what she said. I have no doubt that Mr. Mahadevan understood what he heard. The challenge, I think, in this process was that we didn't lift ourselves and just say, at the end of the day, this advice is poor. Our complaint handling process of this got it wrong. This was a bad outcome for the McDowells. They should have never been in this situation. It should have never gone to FOS. This was a mistake.
And I just want to be clear, because based on the documents that we've been to, Mr. Wright, this was not a one-off. You had received 2 previous complaints which had resulted in payments to customers as a result of Mr. Mahadevan's conduct, both of which had been identified to ASIC. This was not a one-off event for Mr. Mahadevan, was it?
In terms of complaints, no. In terms of the seriousness of the complaints, as I said, one was in relation to an error setting up a staff discount. The second is not acceptable, providing an ongoing advice service.
Particularly in circumstances where the evidence of Mrs. McDowell was that she didn't understand what the ongoing advice fee was for here.
Yes, I heard that today, and that was very disappointing.
In your statement, you were at pains to point out that Mr. Mahadevan's 5 previous routine audits, dating back to the 2nd of December 2010, were all rated effective. Effective is the rating that replaced an earlier descriptor, is that right? Or what are the ratings that could be applied in the audit?
So the audits could be effective. That's sort of the best outcome. Second is qualified, and the third is it requires improvement.
Thank you. And so you were, as I said, at pains to point out in your statement that The last 5 audits dating back to the 2nd of December 2010 were all rated effective, but we know that Mr Mahadevan had been employed by Westpac for some time prior to that. Is there any reason you only went back as far as 2010?
No.
You didn't know that if you went back just 1 year earlier to 2009, you would see that Mr Mahadevan's audit reports showed a number of issues?
No.
You didn't know that?
I didn't know that until I read the documents.
You didn't know that the previous 2 audits resulted in qualified and requires improvement outcomes?
I didn't know that.
I'd like them to be in evidence, so I'll just show you very briefly the 2 audit results. The first is at WBC 503-002-0188. We need 0188. Thank you. And perhaps if we could have the second page brought up next to that. So this is a letter to Mr Mahadevan on the 16th of March 2009. And do you see on the second page there the file outcomes? 4 files were reviewed, 2 resulted in a qualified rating, 1 effective, and the 4th requires improvement.
Yes, I do.
And as a result of this audit, there were exceptions raised across all 4 files, and there was an action plan created that required Mr Mahadevan to revisit each of these clients and provide them with further information. I'll just ask you to look at 0192. Which is the action plan. See that?
Yes, I do.
I tender that document.
Exhibit 2.112 will be Westpac letter and compliance review concerning Mahadevan, 16 March 09, WBC 503-002-0188.
And the second one, Mr Wright, immediately prior to the first one that you referred to in your statement, is WBC 503-002-0157. And we see from the second page of that report, you can see that's dated the 28th of September 2009. There's another requires improvement rating on one of the files there, and again an action plan created for Mr Mahadevan, which appears at 0160.
Yes.
I tender that document, Commissioner.
WBC letter and compliance review concerning Mahadevan, 28 September 2009, WBC 503-002-0157 is Exhibit 2.113.
Mr Wright, I'd like to turn to your other statement now, the statement that deals with the financial advice business generally of Westpac and also with the conduct of 3 other financial advisors. And I want to focus on the conduct of just one of those advisors that you've dealt with in your statement. That's Mr Andrew Smith. Now, Mr Smith commenced as a financial advisor with St George Financial Planning in May 2007. Are you aware of that?
Yes.
Thank you. And in 2008, as part of the merger with St George Bank, Westpac acquired St George's financial advice business.
Yes.
And after that time, Mr Smith was employed by Westpac.
Sorry, Mrs. Orr, this is very inappropriate, but I need to go to the toilet.
Yes.
Yeah, please go to the toilet. Sorry.
Nothing worse than sitting in a rictus of agony, Mr.
I
Wright.
just said we're gonna get into it,
3:05.
Thank you.
Is all.
So, Mr Wright, I was asking you some questions about Mr Smith, who, like Mr Mahadevan, was a senior financial planner with Westpac.
Yes, that's correct.
and he, like Mr Mahadevan, provided financial advice under Westpac's financial services licence.
That's correct.
And he left Westpac in April 2015.
That's correct.
Now, I took you earlier to the details of the financial planner incentive scheme that applied to Mr Mahadevan. Did that also apply to Mr Smith?
Yes, it did.
So the same remuneration arrangements which involved a fixed component of his remuneration and a variable component based on the reward scheme that we've discussed.
Yes.
And on average, do you know what the ratio of fixed to variable income is for a senior financial planner?
I can see it, but I'm just not 100% sure.
Could I show you a document
Please.
to assist, which is WBC 506-002-0167. This is a document from August last year, Mr Wright. It's a memorandum to the BT Financial Group Divisional Remuneration Oversight Committee. You've seen this document before. The first page is the agenda, and then from the second page we have a memorandum to the committee.
Yes, I have.
No, not the... We need a different page on the right-hand side, which would be 506-002-0168. So we had the first page of the document before, which was enough to allow you to identify the document, Mr Wright. The page within it that I wanted to show you, which I hope will assist with the question I've asked, is WBC 506-002-0173. Aha, there we are. So this is part of the document that was prepared for that committee meeting, and it's the first row that I want to direct you to, which relates to the remuneration mix. So this is as at August 2017. So that, do we see there that for senior advisors, that's the senior financial planners, is that right?
That's correct.
That 77% of their remuneration is fixed and 23% of their remuneration is variable.
Yes.
So approximately a quarter of the remuneration that they get is based on that variable component that comes from their share of revenue.
I'd agree with that.
Yes, thank you. I tendered this document, Commissioner.
If I call it BT Finance Group Remuneration Oversight Committee Papers, 18 August 2017, WBC 506-002-0167 will be Exhibit 2.114.
We've already explored a little bit the consequence management system that was in place at Westpac and which remains in place at Westpac, but I want to explore that a little further through the events involving Mr Smith. So over his time with Westpac, Mr Smith was subject to a number of audits. And I don't want to go to all of them, but I want to go to 2011, which is 4 years into his time at Westpac, and take you to Exhibit 110 to your first statement, which is WBC 501-031-5905. And do you see there that this is the result of a compliance audit that was conducted on Mr Smith on the 20th of April 2011.
Yes, I do.
And the result of this audit we see at 5906 was requires improvement. Do you see that towards the top of the page?
Yes, I do.
And that was the lowest result for a compliance audit.
That's correct.
And the results of the requires improvement rating are described in the consequence management policy. Is that right? The consequences for a financial advisor?
Yes, so they have a requires improvement audit.
Yes.
Yes, it does, in
Yes.
terms of the points.
And can we go to the consequence management policy that is at WBC 500-027-0850? This is, if we have the second page on the screen as well, you'll see that this is a version of the consequence management policy that was in place from December 2012. If you look at the top of the right-hand side of the document.
Yes, I agree.
And I took you to a more recent version of this policy when we were discussing Mr Mahadevan. Do you recall that?
Yes, I do.
And as under that more recent version of the policy, this policy establishes that risk rating system that we discussed earlier.
Can you just explain that a little bit further, please?
So your consequence management system applies risk ratings, does
Yes,
it not?
It does.
And it did in the version we looked at earlier, and
Yes.
it does in this earlier version as well.
Yes.
And could I ask you to look at 0854? We see there an explanation of the risk rating system. It enables the business to manage the compliance risks associated with each planner. The individual risk rating for each planner will determine the relevant consequences, training and support. For example, lower risk planners will require less monitoring and supervision, whereas higher risk planners will require closer monitoring, supervision, training and or remediation. Then if we look at how the risk rating is determined, we see again this reference to the 60 points that you commence with. And at this point, depending on how many points are deducted, the advisor was given one of 4 risk ratings, ranking from low risk to extremely high risk.
Yes.
Do you see that?
I do.
And later, by the time we get to Mr Mahadevan, there's 3 risk ratings, which are normal, oversight and mandated improvement.
Correct.
And again, we see the range of points that you need to have to be within one of those ratings.
I do.
Yes. And if we could just turn to 80856, we'll see the equivalent of the page we looked at in the other consequence management policy that tells us how many points are deducted for various events. And we see that there that when a file is rated requires improvement, 10 points are deducted.
That is correct.
And a file that's rated qualified results in 3 points being deducted.
That's correct.
And that consequence was the same right through until the period in 2017 that you referred to earlier, when you made changes to the number of points that were deducted for these sorts of events.
That's correct.
And if we look at 0859, we'll see the consequences that flowed from risk ratings. So do you see there that if you ended up with a high risk or extremely high risk rating, there were revenue implications? Do you see that?
I do.
And the revenue implications for a high or extremely high risk rating were reduction of payment of incentives or any other bonus or special incentive.
Yes.
But if you ended up with a low or moderate risk rating, there were no revenue implications.
Yes.
So you need to fall below the 30 points for revenue implications and below 15 points for the bonus to be cancelled altogether.
Yes.
Is that right? And another consequence we see in this table relates to supervision. Do you see the reference to regional manager supervision? If you end up with a high or an extremely high risk rating, you get more frequent field visits from a regional manager.
I do.
But if you got a low or moderate risk rating, no enhanced regional manager interaction.
No additional. Yes, I agree with that.
Thank you. I tender this document, Commissioner.
Bank Financial Planning Consequence Management Policy, December 2012, WBC 500 027 0850, Exhibit 2.115.
And could I ask you also to look at a document relating to the regional manager supervision process, Mr. Wright, which is WBC 507 002 0490. And this we see is the regional manager supervision policy that was in place from February 2013. You see the date there?
I do.
And if we turn to 0496, we'll see a reference to the supervision activities that regional managers were to undertake. And they included file reviews, live observations, one-on-one discussions and team meetings.
Yes.
And at 0498, we see how many of those you get depending on your rating. So the minimum supervision requirements for low or medium risk planners are here in this table. Do you see that? No file reviews, 1 live observation a quarter, 1 one-on-one a quarter, and 1 team meeting a quarter.
Yes, I do.
But for a high or extremely high risk planner, you ended up with 4 file reviews a quarter, 2 live observations a quarter, 3 one-on-one meetings a quarter, and still just 1 team meeting a quarter.
Yes.
So these were other consequences that flowed from your risk rating.
Yes, additional.
Thank you. I tender that document.
Bank Financial Planning Regional Manager Supervision Policy of February 2013, WBC 507 002 0490, is Exhibit 2.116.
Now, could we go back to the audit report that we looked at earlier, which was WBC 501 031 5905. So this audit conducted in April 2011, we've seen resulted in a requires improvement rating. We saw that from the second page, and that was because 1 file we see from the bottom of the page was rated as requires improvement.
That's correct.
So the result of that would have been that Mr. Smith received 10 demerit points.
That's correct.
And those points would have lapsed 6 months later in October 2011.
For the purposes of RM supervision, yes.
Yes. And then the next audit doesn't happen until after those points have lapsed in December 2011, and you've annexed that audit report at tab 111 of your statement, WBC 501 031 5893. And if we bring up the second page of this document, we see that the review result for this audit was qualified.
Yes.
And that resulted from 3 of the 4 files reviewed being rated qualified. So Mr. Smith would have received 9 demerit points, 3 for each of these qualified file ratings.
Correct.
And these points again would have lapsed 6 months later in June 2012.
Yes.
Thank you. Both of these results would have put Mr. Smith in the low risk category, wouldn't they? Do you recall
Yes,
that?
I do.
Yes,
I
do you recall he would have had 10 points deducted for the first
I was
one?
just making sure the starting point was... So I do agree.
And 9 points here. So he would have been on 50 points as a
Yes.
result of the first audit and 51 points as a result of this audit.
Yes.
So he would still, despite these results, have been entitled to receive his full monthly bonus.
Yes.
and he would not have been subject to any increased monitoring by his regional manager.
That's correct.
And then the next audit is conducted on the 11th of March 2013. You've annexed that at tab 112 of your statement. That's WBC 501-031-5886. This audit is 15 months after the last time. All his demerit points have reset.
Yes.
And for this audit, again, we see from the second page that Mr Smith receives a requires improvement rating.
That's correct.
And of the 4 files reviewed, 2 were rated requires improvement and 1 was rated qualified.
Yes.
So this would have led to 23 demerit points being deducted, 10 for each of the required improvement and 3 for the qualified. So he would have had 37 points left.
I agree.
And that would have put him in the moderate risk category, which was 31 to 45 points.
Yes.
So he still would have been entitled to receive his full monthly bonus,
Yes.
and he would still not have been subject to any increased monitoring from the regional manager.
Yes.
And again, these 23 points would have lapsed 6 months later in September 2013.
Yes.
And there's no further audit until September 2014. Again, you've annexed that to your statement at tab 113, WBC 501-025-5095. There we are. And so this audit is over 18 months after the previous audit.
Yes.
Do you know why it took so long for this audit to take place?
I do.
Why was that?
The implementation of FOFA required all resources, if you like, on deck to make sure that we were ready to go and fully operational.
So you stopped auditing your advisors to put your resources into dealing with the FOFA reforms?
No, I didn't say we stopped. We reprioritised, and in Mr Smith's case, that was reprioritised.
And why was he reprioritised given the audit results that he had achieved in the audits up until now?
I don't know.
Was that the right decision?
In hindsight, it doesn't feel like the right decision to me, but I wasn't there and I can't give context on the conversations, but to me it certainly doesn't feel right.
Mm-hmm. So at this audit on the 15th of September 2014, if we can bring up the second page, again, if we could perhaps have the entire page, we can see the review result up the top is requires improvement again. And of the 4 files, 1's rated requires improvement and 1's rated qualified.
Yes.
Which would have resulted in 13 points being deducted, 10 for the requires improvement, 3 for the qualified, meaning that Mr Smith would have had 47 points left after this.
Yes.
So he would still have been on a low risk rating,
Mm-hmm.
and he would still have been entitled to his full monthly bonus, and he still would not have been subject to any increased monitoring despite these results.
Yes.
So at this time, 3 out of 4 audits since 2011 had given him the lowest possible rating, and the other one had given him the second lowest rating.
Yes.
Why didn't any of his regional managers look at his conduct at this time?
As I mentioned in my statement, the control environment and the supervision environment, particularly pre-FOFA, wasn't at the level it needed to be. I'm not going to mention post-FOFA and what's being done. We can potentially talk about that a little later. But the reality is the control environment wasn't strong enough. It wasn't robust enough. And unfortunately, even with some of these indicators, the system didn't do enough to make sure that heavier consequences were applied here.
Well, I want to put to you squarely, Mr. Wright, that the system failed because your system was to review 4 files each year for an advisor, and the advisor could receive subpar results on the majority of those files and still not end up with any increased supervision or even any reduction in their bonus payments.
Yes, I agree.
Do you agree that that's a failing?
I do.
And what about the fact that at the end of each 6-month period, when audits are conducted annually, the demerit points are wiped clean off the slate?
For supervision
Yes.
purposes,
Yes.
I agree, as I stated in my statement, that is a design flaw which we will be changing.
And what it meant was that the points that were allocated as a result of an annual audit always disappeared before the next annual audit. So you could never accumulate points.
Mathematically, yes. Yes.
There were also complaints made about Mr. Smith over this period, weren't there?
There was.
There was one in October 2010, there was another in April 2011, there was another in August 2012 and another in October 2014. You tell us that at paragraph 408 of your statement.
Yes.
So combined with the audit history over this period, it must have seemed likely to anyone who was looking at the whole picture in relation to Mr. Smith that there were significant problems with his advice beyond those that were apparent from the very small number of files that were being looked at in these audits.
I agree with that, and I mentioned that in my statement.
But as we've said, he continued to be eligible despite the complaints, despite the results of the audits, for his monthly bonuses and not to receive any supervision as a result of these results.
No additional supervision.
Did Mr. Smith's regional managers not have access to this information about his audit results and his complaint history?
They did.
They did have access to it?
Yes.
And why did they not do anything with it?
One of the insights reviewing all this material, it's very clear that in the past we've looked, and maybe in the present, we've looked too much at the micro moment, that event. We haven't holistically looked at the big picture, as you said, because I think if we'd done that, the consequence and the conversation would have been very different.
So what have you done to fix that?
So in terms of, say, the bigger picture piece, over the last 3 months we've put in a monthly review, myself with the state general managers and our first line defence team and second line, to look at the outcomes of our advisors and all the things that could go into their categories such as audits, complaints and other instances, and to ensure that if we look over the long picture, up to 2 years, and we don't drop the points off, we add them over the 2 years to see if there's any concerning trends. We then calibrate, which in essence just means we benchmark them to others, and if there's an issue, then we take action.
So did you say this is something that you've been developing over the last 3 months?
Sorry, not developing, we've put in place the last 3 months.
And how do the monthly reviews work? Who conducts them?
So in terms of the monthly review of our, if you like, higher risk advisors based off the data, the holistic data, our first line of defence risk and compliance officer runs that. We also have second line. We also have all the state general managers and myself. We review all the data, 2 years of data, including an aggregation of consequence management points over 2 years, to see is there a problem with any of our advisors on a bigger picture.
And why has it taken this long to implement that system, Mr. Wright?
I think the reality is we relied way too much on the system to tell us. I reflect on the journey of consequence management I reflect on the plans that we had in place in 16 big plans that we watered down significantly for business prioritisation reasons, and we made some changes in 17 early. We made some bigger changes in 18. The reality is we've relied too much on the system to tell us when to do additional oversight.
Mm-hmm. You have 500 employed financial advisors, and you had up until the last 3 months been relying on your annual audits of 4 files of those advisors.
No, I wouldn't agree with that.
What else have you been relying on?
There's a suite of protective and detective controls. Supervision is one of them.
Yes, but as we've seen, even with poor audit results, supervision did not get enhanced.
I agree. Pre-FOFA, that is definitely the case. The point I was going to make is the suite of 6 controls together, mandating paraplanning to look at advice before it goes out, pre-vetting of all advice documents to ensure that new advisors are fit for purpose. Our plan of risk insights, in essence, it's an alarm system. We throw out 24 tripwires over the entire advisor base every quarter, and if someone gets tripped, we look into it, and if it needs to be investigated or go to a compliance manager, we do that. The investigations team has been further resourced, and as you would have seen in my table to statement 1, the amount of compliance officers is quadrupled from sort of mid-60s to mid-200s, with the advisor base in essence the same. Supervision, and the last one, I know there's a 6, but I can't remember.
Can we go back to...
Actually, I do remember, sorry.
Yes.
The compliance audit program, which is a very important one.
Yes, that remains a very important part of your prevention and detection, doesn't it?
It does.
Okay. So can we go back to Mr. Smith and the next audit result that he got in 2015, on the 22nd of January 2015. You've annexed that as tab 114 of your statement. It's WBC 501-025-5070. And if we could have the second page on the screen as well. Thank you. We see that again in this audit, Mr. Smith receives a requires improvement result. And of the 4 files reviewed, 3 were rated requires improvement and 1 was rated qualified. And this would have meant that he had 33 points deducted, 10 for each of the requires improvement and 3 for the qualified. And this time, because this audit was less than 6 months after the previous audit, where he was already down to 47 points, these points took him down to 14 points, which put him in the extremely high risk category. Is that correct?
Your maths was very good. I'm just checking it. I'll take you on it.
Well, you know, don't you, Mr. Wright, that as a result of these audit results, Mr. Smith was escalated to the Westpac and St George Financial Planning Risk Forum. And could we go to your tab 94, which is the Risk Forum report? WBC 500-015-1382. And if I could ask you to turn to 1388, Mr. Wright. We see there that it's noted that Mr. Smith had received 4 out of 5 requires improvement ratings since his commencement with the business. And at 1406, there's a recommendation towards the bottom of the page from compliance. Compliance strongly recommends that St George reconsider whether Andrew should remain operating as a planner under the St George brand. And following this risk forum, there was an investigation into Mr Smith's conduct.
Yes, there was a preliminary one.
And on the 16th of March, yes, this was February 2015, and on the 16th of March, he's suspended from providing financial advice to customers pending that investigation into his conduct. Is that right?
That's correct.
And on the 25th of March, Westpac has a meeting with Mr Smith at which he's presented with a letter containing allegations about his conduct.
That's correct.
And that letter is Exhibit 96 to your statement, WBC 500-021-6797. And we see, if we could have both the first and second pages brought up. And you have this document in front of you in hard copy as well, Mr Wright. Do you agree with me that the allegations that were put to Mr Smith in this letter included that his conduct constituted a potential breach of the Westpac Code of Conduct? We see that at the bottom of the first page.
I do.
And breaches of various other Westpac policies relating to the best interest duty.
I do.
And breaches in relation to the documentation of advice.
I do.
Breaches in relation to conflicts of interest.
I do.
Which were said in this letter at 6799, if proven, if substantiated. Do you see towards the bottom? These allegations made against you, if substantiated, could amount to serious misconduct. Westpac considers these matters to be very serious and, if proven, may lead to disciplinary action being taken against you up to and including the termination of your employment.
Yes, I do.
And on the following page, on this page, Mr Smith is given the opportunity to provide a written response to these allegations by the 30th of March.
Yes.
But having attended the meeting on the 27th of March and received this letter, Mr Smith resigned.
Mm-hmm.
And subsequent to his resignation, a report on the investigation into his conduct was created.
The first investigation report?
Yes.
Yes.
Yes, on the 13th of May 2015, at which you've annexed it Exhibit 85 to your statement. It's WBC 501-003-5001.
Sorry, what was the exhibit?
85.
85, thank you.
And we see there from the second paragraph that the investigation flowed from a review of 10 files. And in those 10 files, the investigator found numerous serious deficiencies, including a failure to keep adequate records to support the basis of advice in all 10 of the files, and 8 instances where Mr Smith hadn't identified and recorded the subject matter and scope of the advice, and 7 instances where he had not demonstrated consideration of any viable alternative strategies.
I agree.
Mm-hmm. And do you see there at the second dot point, failure to use systems as required? This is evident through lack of client details in BPM/CFM. Can you explain what BPM and CFM are?
Yes, I can. BPM, the acronym stands for Business Process Management, and in essence, it's the front door to get anything done. So you enter the front door and it'll then allow you to decide how you allocate work and get things done.
So it's an electronic management system.
Workflow management, exactly.
Yes.
The additional point I'd make is there's lots of doors closed, if you like, and things have to happen before it can go into the next room, if you like. At the back of the house is what we call CFM, which is our customer file management system, and that stores digitally all our customer records.
I see. And is it compulsory for financial advisors to store their client records in these systems?
Absolutely. This was introduced in 2014, these two systems.
A statement you suggest that it was in September 2013, Mr Wright, but I may have that wrong. It's paragraph 417B of your statement.
I'm sure you're correct. There was a transitionary phase to when it went live to when it was mandated.
But certainly by this point, this was mandatory for your advisors to use these electronic systems.
Yes.
And then staying within this investigation report, if we turn to the second page, we see there a particular concern that the investigators have noted in relation to recommendations by Mr Smith that several of his clients invest in NAB capital notes.
Yes.
In circumstances where there was an incentive for planners to recommend that customers invest in these notes. That's dealt with in the second full paragraph on that page. And the investigators noted that Mr Smith may have recommended that clients invest in those NAB capital notes without considering whether they were appropriate for the client and without providing any appropriate advice document for the clients.
I agree.
And you specifically refer to this issue in your statement, and you say that Mr Smith appears to have sought to have 20 customers purchase the same hybrid security on the same day pursuant to execution-only instructions in circumstances where it was apparent that he advised the customers to enter into the transaction.
That's correct.
So that's a very significant and concerning matter, is it not?
It is.
Because if he's providing personal advice, he should be providing a statement of advice rather than dressing it up as execution-only instructions.
Yeah, absolutely.
When did you work out that Mr Smith had done that in relation to those 20 customers?
So reviewing the file, it was clear as this issue was about to close, Mr Smith tried to not circumvent the system, but try to get in the system 20 execution-only pieces of advice and get that processed, which raised significant alarm bells. You know, we are a retail advice business based off personal advice. We're not a stockbroking business. This was the way that Mr Smith was acting, and it wasn't appropriate.
And when did you work out that he'd done that?
It was when this issue was close to finishing, which I thought, off my reading, was more around March 2015.
In March 2015.
Could have been February. It was February, March, I think, 2015.
Okay. And you say in your statement that one of the reasons that you think Mr Smith did this was because he could earn significant fees on the NAB capital notes.
He could.
Yes. So there were placement fees for these securities?
Stamping fees, yes they were.
Yes. And would you accept that those fees offered by NAB in connection with those NAB capital notes influenced the advice given by Mr Smith?
On the surface, it looks to me that it did.
Mm-hmm. So those fees constituted conflicted remuneration?
Stamping fees aren't banned remuneration. But having said that, it's certainly not the model that we embraced, and we actually stopped that practice in July 2015.
So why did you stop it?
Well, I think the first reason is it became apparent with the 20 execution-only customers that was unacceptable. We then realised that we had advisors like Smith acting like stockbrokers, which is not appropriate. So in July 2015, we banned execution only. We banned salaried advisors receiving a stamping fee. And those proceeds, if they flowed into the dealer group, were put towards education and training.
Yes, thank you. Now, could I take you to Exhibit 93 of your statement, which is WBC 500 019 8359?
Sorry, I always miss the exhibit.
I'm sorry, it's 93.
93, thank you.
Have 5 volumes of your exhibits, Mr Wright, so
Tell me about
there's
it.
a number to go to. Now, this exhibit is a report that was prepared in July 2017 in relation to remediation of Mr Smith's clients.
Yes.
we don't seem to have the right document on the screen. WBC 500 019 8356. I'm sorry, I think it's my fault. I gave the wrong number. Yes, I'm sorry, it is my fault. 8356. I do want to go to 8359. That's probably why I got the number wrong, but it's fair that I show you the first page of this before I do that, Mr. Wright. Now, if we can go back to the page I had in mind, 8359. So in this report, which is about remediation, principally about remediation of Mr. Smith's clients, we see at 8359 a reference to this NAB capital notes issue.
So I have 8356. Do we need to
I
go
think
forward 3?
On the screen now is 8359. Do you see the heading Business
sorry,
and Planner
I'm looking-
Conflicts?
Yes, I'm looking at the wrong side. Sorry.
And do we see there that in this document there is identification of the fact that the advice that Mr. Smith gave to his clients to purchase the capital notes might have been the consequence of incentives?
Is there any chance we could just re-anchor ourselves back to the... Could I just look at the start of the document, please?
Yes, I'm sorry, I've made that very difficult. 8356 is the start of the document, so this is it's an assurance report from the 6th of July 2017, which appears to principally be about reporting on remediation of Mr. Smith's clients. But within that document, we have this page that I've directed you to because it deals with the NAB capital notes issue, which is 8359. There, you have both of those pages now.
Thank you.
And there was an acknowledgement by Westpac in this document in July 17 that the advice that Mr. Smith gave to his clients in relation to the purchase of those NAB capital notes might have been a consequence of the incentives.
Where would I see that?
Maybe a function of incentives and cross-referrals is in the first column on the bottom row in the first paragraph.
Yes, I do see it.
And do we see there as well that these considerations resulted in the changes that you've described earlier in your evidence?
Yes, I do.
The changes that you said were made in July 2015 to ban this sort of conduct.
That's correct.
Okay, now can we just come back to the investigation into Mr. Smith that was still being conducted? We looked at the first report of the investigation. There was also a supplementary investigation report, which is Annexure 86 to your statement, WBC 100 004 9464. And this supplementary report was prepared following review of a further 10 files.
That's correct.
So by this time, 20 of Mr. Smith's files had been reviewed. And do you see on the first page there that collectively the initial and supplementary parts of the investigation, do you see that reference to collectively down the page?
I do.
They showed consistently inadequate investigation into client circumstances, needs and objectives, potential poor advice practices, in particular relating to consideration of alternative strategies, inadequate record management and failure to provide advice documents at the right time or at all. Now, at 9464, we also see below that we are unable to confirm conclusively that the advice given in any case is appropriate for the clients. And you see the reasons for that listed below.
Yes, I do.
And on the following page, we see things that have hampered the investigation. In the final paragraph, the investigation has been hampered by exceedingly poor management of client file records of this planner. In our experience, the files were put together in such a haphazard way as to be the worst we have seen in recent times. The ability for this to be allowed to occur without being identified and resolved over such a period indicates a potential control weakness that should be examined further by the risk team to ensure other instances are identified in other advice areas. Was that control weakness identified further, or examined further, I should say?
Can't think it was. I know fast forward to 2017, yes, but I'm not too sure then actually. Sorry.
Well, there isn't anything referred to in your statement, is there, to suggest that at this time, after this warning, steps were taken to examine this control weakness that was identified in this investigations report?
No, there isn't.
Mm-hmm. And based on these two investigation reports, which you no doubt have read, do you think that Mr Smith provided inappropriate advice to customers?
In many of the cases, it was difficult to determine because of the poor documentation and evidence. There are moments in cases where I do believe inappropriate advice was provided.
Mm-hmm. And I'm sorry, you go on.
There was moments I mentioned in my statement around product replacement. I can't remember the customers' names. There was moments where the stamping fee issue that we've already addressed, and there was moments where the provision of ongoing advice hadn't been provided.
Mm-hmm. Well, you tell us in your statement in paragraphs 379 to 385 that, in your view, Mr Smith recommended investments or strategies that were too risky given the customer's risk profiles and personal circumstances. In some cases, he transacted without the customer's authority. He charged ongoing advice fees without providing the promised services. And you also identify the issue that you've just mentioned then about the NAB capital notes advice. Do you accept that each of those things happened in relation to the advice provided by Mr Smith?
I accept those statements, yes.
Yes. And you've said in your statement that a remediation team was formed to deal with all of this, and customer file reviews began in June 2015, and remediation began in August 2015.
Yes, that was a business as usual remediation team that we created.
What do you mean by that, Mr Wright?
There's two remediation teams within Westpac. One's a very structured from the centre, if you like, from head office. That's the advice review team, which the Smith case goes to, I think, in the following year. The business as usual remediation team is more ad hoc. We don't do it very often now, but back then we did. And then they had to find a couple of planners and a support officer to start remediating the customers.
And how much has Westpac paid in remediation to Mr Smith's customers?
So in terms of the business as usual remediation, there were 112 customers that we looked or attempted to speak to. 36 of those customers, around 30, we remediated for $1.6 million.
$1.6 million.
That's correct.
To 32 customers, I think you say in your statement.
32, that's correct. Thank you.
And I'm sorry?
Then there's the other, sorry to cut you off, there's the
No,
other
you go on.
remediation program where they look at the back book of customers, those who weren't advised by Smith at the time. There's a significant amount of customers, a couple hundred. The advice review team have done the reviews. There's $600,000 provisioned to pay 59 customers by January 2018.
By January 2018, did
That's
you
correct.
say? So we're now in
Sorry,
April.
June.
June 2018. So that was 112 customers dealt with by the business as usual remediation program, 59 customers dealt with by the other part that you've just described.
I'm sorry, I wasn't very clear. The advice review team looked at hundreds of previously advised customers for Smith
Yes,
and identified and reached out to them
yes,
and identified 59 customers
Yes.
who need to be remediated.
yes. So that puts us at about 170 customers affected by Mr Smith's conduct who require remediation, and remediation that has been paid or will be paid at over $2 million.
It's just a subtlety. Sorry, I'm confusing you. The business as usual remediation, there was 32 customers
Yes,
plus the 59
yes.
is whatever that is.
I'm sorry, I used the figure of 112
yeah.
when I should have used the figure of 32.
Yes.
So the total customers were 32 plus 59,
Yes,
and the total remediation is still over $2 million.
that's correct.
Thank you. Now, I was going to move to a separate topic now, Commissioner. I see we're close to 4. It's a matter for you, Commissioner, as to whether I should continue. I won't be in a position to finish Mr Wright today.
Is it worthwhile doing one more subject?
Yes,
or
I
am
think-
chancing my arm?
No, I would be happy to do one more, Commissioner. Now, Mr Wright, prior to receiving the supplementary investigation report, on the 6th of July 2015, Westpac received a notice from ASIC under Section 912C of the Corporations Act,
That's correct.
and that notice is annexed to your statement at tab 115. It's WBC 500 021 8896.
Sorry, what's the date?
6 July 2015.
Thank you.
So this is the notice that Westpac received from ASIC, and at 8900, we see what ASIC asked Westpac for. ASIC asked Westpac for information about advisors for whom serious compliance concerns had been identified. And at 8901, ASIC also asked for advisors for whom other compliance concerns had been identified. If we've got both of those pages on the screen at once, we can see the difference here between serious compliance concerns and other compliance concerns. So serious compliance concerns, 8899. Yes, serious compliance concerns are where the licensee believes and has some credible information in support of the concerns identified that a financial advisor may have engaged in dishonest, illegal, deceptive and/or fraudulent misconduct, or any misconduct that, if proven, would be likely to result in an instant dismissal or immediate termination, or deliberate non-compliance with financial services laws, or gross incompetence or gross negligence. And other compliance concerns are listed there and include breaches of internal business rules or standards, adverse findings from audits, and conduct resulting in actual or potential financial loss to clients. So at this time, when Westpac received this notice, it had the initial investigation report from May 2015.
Yes.
And work on the supplementary investigation report would have been well underway.
I'm assuming so, yes.
Yes. And did Westpac identify Mr Smith in response to ASIC's notice?
I know we do, but I think it's a later date.
Yes. In your statement at paragraphs 420 to 421, you tell us, Mr Wright, that you did not identify Mr Smith to ASIC in response to this notice. Why not?
I don't know. I wasn't involved in the preparation. I'd only be speculating, actually.
Do you accept, though, that at this point it was clear that Mr Smith had been the subject of adverse findings in multiple audits?
Yes, I do.
And that he had breached Westpac's internal business rules and standards.
Yes, I do.
And that was enough to put him in the category of other compliance concerns.
Yes.
And before he resigned, Westpac made allegations against Mr Smith that Westpac said could result in termination of Mr Smith's employment.
Mm-hmm.
And that would have put Mr Smith into the category of serious compliance concerns.
Again, I'm not qualified, but that would certainly appear the way.
But Westpac did not tell ASIC about Mr Smith's conduct in response to this notice.
I feel a little confused, and I'm sure it's me. Was this in relation to existing advisors?
Well, if you'd like to look at exactly what was asked for, it's 8900, a list of the names and dates of births of all financial advisors for whom serious compliance concerns have been identified by the licensee.
Okay.
Do you accept that Mr Smith ought to have been notified to ASIC pursuant to this notice?
It would appear that way.
Thank you. Perhaps that's a convenient point, Commissioner.
How are we travelling for time?
Commissioner,
I can start at 9:45 rather than 9:30 is what I'm asking.
Yes, you can, Commissioner.
Yeah, 9:45 tomorrow then. Yes, Ms. Orr.
Mr Wright, we finished yesterday with some answers that you gave to questions from me about a notice that was served on Westpac by ASIC in July 2015. And you said that Westpac did not identify Mr Smith in response to that notice. And a few months later, ASIC sent Westpac another notice, is that right?
That's correct.
And that was on the 11th of September 2015.
That's correct.
And that notice also requested information about advisors for whom other compliance concerns had been identified.
That's correct.
And in response to this notice, Westpac did identify Mr Smith to ASIC
That's correct.
as being someone for whom other compliance concerns had been identified.
Yes, that's correct.
Okay. And so what had changed between July and September 2015 that meant Westpac thought it was by then appropriate to notify ASIC about Mr Smith?
What I can sense, reading through the information, and I refreshed my understanding last night, was the first notice, particularly around serious conduct, asked for all advisors, past and present. My interpretation of the first notice around other, it was only in relation to existing, which Mr Smith was not an employee at that stage. The second notice, which was just around other, was, my understanding, was in relation to all advisors, past and present.
And what did you base that interpretation of the first notice on? What was it that led you to believe it excluded advisors for other compliance concerns that were no longer with Westpac?
Again, I'm not qualified, but reading that notice, that was the way I interpreted it.
There was no express exclusion though, was there, Mr.
No,
Wright?
there wasn't.
No, thank you. On the 3rd of November 2015,
Commissioner, just to be fair, I think there is actually express language in the notice that draws that distinction, but I just want to raise it with my learned friend so that she can take it up with the witness while he's still there.
Yes.
perhaps we'll dig the notice out, Mr. Wright, which is Exhibit 115 to your first statement. This is the notice we looked at yesterday.
Mr. Wright is going through the papers.
And the doc ID, Commissioner, is WBC 500 021 8896.
Yeah, so it's 8901 deals with other compliance concerns. If you look at paragraph 3, it's at the date of this direction.
I see. So page 8901 in that document, Mr. Wright.
Yes.
We see there, well, we will see there, paragraph 3, a list containing the names and dates of birth of all financial advisors authorised by the licensee as at the date of this direction. Is that what you're... Well, I was going to say, is that what you're referring to? But you didn't refer to this, Mr. Sheehan referred to this. Do you see that there,
I do.
Mr. Wright? And do you want to change your answer now to me about whether this did have an express exclusion for advisors who had who were no longer working with Westpac?
Yes, please. It's very clear that it was expressed.
Thank you. Now, I was moving Mr. Wright to the 3rd of November 2015 when the Westpac Group Compliance Breach Determination Forum met.
Yes.
And determined that the incidents in relation to Mr. Smith were significant. You refer to this in your statement. And following this, on the 17th of November 2015, Westpac made a notification to ASIC under Section 912 capital D of the Corporations Act.
Yes.
So that was a significant breach notification.
Yes.
And it was made several months after the investigation report and the supplementary investigation report.
Yes.
Mm-hmm. And why did Westpac delay before making that breach notification to ASIC?
Reading through the material, it's very clear that there was a series of investigations. There was the initial, then there was the supplementary. Throughout that process, there was also compliance assessments done by second line. There was an interim one done in May and an interim one done in September, and then a final in October. The final in October was very clear, and it made a recommendation to the Breach Determination Forum in relation to notifying ASIC. The complication was in relation to finalising legal opinion. The other complication is we need to get this right, because the consequences of getting it wrong is significant for our people, because obviously it goes on their record as a part of the ABA reference checking. I do acknowledge it feels like quite a long time, but there was a lot going on.
Well, it does, doesn't it, Mr. Wright, because your first investigation report was in May 2015 and findings were made in May 2015, and your second report was in July 2015 and further findings were made then.
Yes.
And by July 2015 you were remediating Mr. Smith's clients.
We were.
But you took until November 2015 to tell the regulator anything about this.
We did.
Yeah. And I should qualify that to say anything to the regulator about this in terms of a significant breach notification.
Yes.
It had only been described as an other compliance concern.
Prior to that, yes.
Thank you. You say in your statement that from February the following year, February 2016, Westpac provided a significant number of documents relating to Mr. Smith to ASIC.
Yes.
And this was in response to multiple notices from ASIC that were issued after you made the significant breach notification.
Yes.
And can I ask you to look at your Exhibit 91, WBC 501-004-6906. This is a document entitled Summary of Key Factual Matters Concerning the Planner, Mr. Andrew Smith.
Yes.
And did Westpac produce this document to ASIC?
Yes.
And it was produced pursuant to one of the notices issued by ASIC?
It was.
And did Westpac prepare this document for the purpose of producing it to ASIC?
Yes, it did.
Thank you. Now, in this document, there are a number of concerns identified by Westpac in relation to Mr. Smith. We see the heading at the bottom of the first page, Westpac's concerns with Andrew Smith. We then see a heading on the next page about the first of those concerns, which is poor file management. Do you see that on the following page, Mr. Wright?
I do.
And if we move through the document, we see that the next concern at 6908 is confirmed concerns with Mr. Smith's advice or advice-giving processes.
I do.
And under this heading, at paragraph 13, subparagraph A, there is the identification of a single instance of Mr. Smith issuing execution-only statements in relation to in relation to NAB capital notes in February 2013, in circumstances where it appeared that personal advice had been given.
I do.
And the next heading in the document, if we stay on that page but pan out, the next concern was a concern with Mr. Smith's advice or advice-giving processes. And if we move to the following concern at 690, we move to the next heading and we've finished the identification of the concerns, and we're now in background to Westpac's identification of the concerns. And under this heading, in 19B, there is a reference to the review that identified customers of Mr. Smith who'd applied for the NAB capital notes with a combined value of $3 million. Do you see that?
I do.
Now, you've given evidence about the review that led to Westpac working out that 20 customers of Mr. Smith had applied for those capital notes in circumstances where they had not been given personal advice, execution-only instructions. You told us yesterday in your evidence that Westpac identified that issue in February or March of 2015.
Yes.
And this is a document in response to ASIC's request for information in April 2016.
Yes.
Why didn't Westpac disclose as one of its concerns about Mr. Smith's conduct in this key factual matters document the view that had been formed over a year earlier that Mr. Smith had presented 20 transactions as involving execution-only instructions in circumstances where he gave personal advice?
Can I just read that paragraph, please?
Yes, and just to help you when you're reading it, my point is that this document contains a long list of concerns identified by Westpac with Mr. Smith's conduct. Those concerns do not include the execution-only instructions to the 20 customers who acquired NAB capital notes. That is referred to only in passing in the background to the identification of those concerns in this part of the document. Why is that? Was Westpac downplaying that incident?
I can't explain why that is the case. I apologise.
Mm-hmm. Do you accept that it should have been disclosed as one of the concerns to ASIC at this time?
Again, I'm not qualified, and these reports are done by our second line mapped against the legislation. I made it very clear yesterday what I felt in terms of the notes issue and what we did.
Yes. Well, the conduct of Mr. Smith in connection with that issue was a breach of his obligation to give a statement of advice when providing personal advice. Mm-hmm. Yes?
No. So Mr. Smith was providing execution-only
yes.
advice,
yes.
which the requirements for documentation is significantly less.
Yes, but it was not, it was personal advice, wasn't it? I thought you had conceded this yesterday and therefore required a statement of advice, but it had been dressed up by him as execution only.
No, sorry, there must have been a misunderstanding. It was execution only. My concern was that we are a retail advice business that provides personal. He was acting like a stockbroker. That's why we stopped it. Mm-hmm. And therefore personal advice needed to happen with this type of arrangement going forward.
Well, perhaps if we could turn to paragraph 384 4 of your statement, Mr. Wright.
Yes.
Perhaps if we could have WBC 900 001 0263 brought up.
So was it 384?
384, Mr. Wright. You see there what you told the Commission in your statement, Mr. Wright, was that the investigations into Mr. Smith identified instances where Mr. Smith appears to have failed to provide customers with the requisite advice documents. In particular, the investigations documents identify an incident in which Mr. Smith appears to have sought to have 20 customers purchase the same hybrid security on the same day pursuant to execution-only instructions in circumstances where it was apparent that Mr. Smith had advised the customers to enter into the transaction.
Yes, I do. No, I don't.
Right. So what I'm putting to you, Mr. Wright, based on your evidence here, is that Mr. Smith had breached his obligation to give a statement of advice when providing personal advice in relation to these hybrid securities.
Sorry, it's a technicality under 384. I don't mention statement of advice. Within the advice industry, there is a series of advice documents: statement of advice, record of advice, and execution only.
I see.
So when I'm talking about the requisite advice document, it's the execution only
So
document.
there was a failure by him to provide requisite advice documents. Let's park for now exactly what style of advice documents. Yes. Your evidence is that he failed to provide the customers with that in circumstances where he had advised them. Now, this was dishonest conduct, was it not, Mr. Wright, in that he sought to conceal that he was giving personal advice and to present it as involving execution-only instructions?
No, I disagree with that. He wasn't giving personal advice. That was my concern. The advice he was giving was like a stockbroker, which was execution only, customers going into these offerings. That was my concern.
Mm-hmm. Where do we see that concern in this paragraph, Mr. Wright? The concern you express here is about his failure to provide them with advice documents.
The requisite advice documents being execution only, yes.
Yes, I see. I'll come back to the ultimate question about this, which is why was it not disclosed to ASIC in the document that we've just looked to, given that it was detected by Westpac in February or March of 2015 and not told to ASIC in April 2016?
Unfortunately, I don't know. I didn't create this document.
Mr. Wright, I asked you yesterday about whether Mr. Mahadevan was known by Westpac to be a member of a professional association such as the AFA or the FPA.
Yes.
Do you know if Mr. Smith was a member of a professional association?
I don't.
Do you know if Mr. Smith's conduct was reported by Westpac to any professional association?
I don't.
Mm-hmm. And when I asked you yesterday why Westpac requires its advisors to be members of the FPA, as part of your answer you said to me that it was part of professionalising those advisors. Do you recall that?
As a part of professionalising the way we go forward as a business, yes.
Well, what do you mean by professionalising?
What I mean is, since 2014, we've had a significant focus on education standards within BT. We've also had a significant focus on ethics and a focus on our people being reflective practitioners in the sense that they're always improving themselves. Joining the FPA is just a component of the overall package of being a true professional. A true professional, did you say? Do you see financial advisors as being professionals, part of a profession? I see financial advisors definitely being professional. I see that the industry of advice is on the cusp of becoming a true profession.
What's stopping it from becoming a true profession, Mr. Wright?
I think there's some there's some couple of things. I think the first one is around education, expectations and professional standards. And there's a significant amount of work being done on that recently. I think our industry will always need to manage, like all businesses, conflict. As I say in my statement, whether it's remuneration or product, that conflict will always need to be managed, whether it's actual or perceived. And the third pillar for me is that the customer is always at the centre of everything. So they would be the three themes for me around becoming a true profession.
Do you say that up until now the customer has not always been at the centre?
I think there's instances where that has been the case, particularly early on in this time frame that I was asked to look at, which was over 10 years.
Do you think that the public place their trust in financial advisors in the same way that they place their trust in other professions like doctors and lawyers?
No, I don't,
And why not?
because we haven't earned it yet.
Do you agree that the financial advice industry has its origins in being a way to promote or sell financial products?
In terms of its origins, if you mean,
Of the industry?
3 or 4 decades ago, yes, I would.
Do you agree that in the past the financial advice industry has had a strong sales culture?
I think that would be a fair comment.
And do you think that's changed?
I do.
And how has it changed?
I think it's changed significantly.
How?
Well, I think the first thing is if we reflect on FOFA, the fundamental changes that came with the future of financial advice were considerable, particularly banning conflicted remuneration from July 2013. In essence, that meant that for us to provide advice, we needed to show real value to customers because they were paying for the service in relation to an ongoing advice relationship. The other cornerstone part of the future of financial advice legislation was transparency in terms of the fee disclosure statement for ongoing advice customers, but more importantly, the ability for them to opt in regularly. I think there is an opportunity for us to take it to another level, and I think the debate around grandfathering will be a debate that this industry needs to have.
And what do you think should happen with grandfathering?
Well, I think there's 2 components to the grandfathering of the legislation. Often we talk about commissions, but there was another grandfathering moment around ongoing advice and opt-in. BT made a very clear decision at that point that every ongoing advice customer deserved the opportunity to opt in from July 2013, whether they were pre-FOFA or post. I think there's a real opportunity for the industry to debate that. The second piece, which is much more topical, is grandfathered commissions. I think it's more complicated, but I think FOFA has proven that customers are willing to pay for advice if they can see value. I think we've grown up enough to start the opportunity and the debate around what we do with grandfathered commission. I don't think it's an easy one. There's real implications if you were to move first, but I think the debate should start.
And what's your position on what should happen with the grandfathered commissions? Do you think it's fair that commissions should still be realised by financial services entities in 2018 beyond in relation to arrangements that were put in place before July 2013?
What I believe is that the provision of quality advice is critical to Australians, and reading through the Treasury paper as a part of this Royal Commission, it was very clear that they could see significant benefits in advice if done well. I believe that too. I think the challenge for us as an industry is a couple of fold. If an organisation decided to stop paying grandfathered commissions, the reality is it would put themselves in a very significant competitive disadvantage in the sense that the commissions that have been received by dealer groups and advisors to supplement their advice and subsidise their advice, that would stop. That would have significant brand damage on that product provider. I think the other thing is that we need to make sure that Australians can get quality advice, and I think the latest changes as a part of the life insurance framework really make that very clear around insurance. The last piece is there's hundreds, thousands of small businesses, partnerships and equities, and corporate structures that employ financial advisors to help customers. Moving those trails overnight would impact potentially the viability of their businesses. So sorry, to answer your question.
Yes, thank you.
Sorry. My personal opinion is I can't wait to the day when we are fully fee for service for insurance and super. We've seen it's possible. I think for it to occur though, the debate needs to rage. I do think legislation needs to be a part of the conversation because there's significant disadvantages for someone unilaterally moving first.
Do you think of yourself, Mr. Wright, as a sales professional?
No, I don't.
I've had a look at your LinkedIn profile, which lists various things about what you do, and one of the descriptors that you give of yourself is as a sales professional. Mm-hmm. Is that right?
It could be.
Would you like me to show it to you, or I'm happy to?
No, I'm happy to believe you.
I'm interested in that because I want to understand whether you think of the financial advice industry as a sales industry.
I don't.
You don't? And do you think it's possible for a financial advisor to be both a salesperson and a trusted advisor at the same time?
Well, to me, they're connected. To be a trusted advisor means that you understand your customer, you tailor their needs to their desires. Often, to realise that, you need to put strategies in place, which in essence result in products. So by default, if you genuinely care and taking action, there will be an element of product to bring that to life. So yes, you could say that is a sale.
Maybe there won't, Mr. Wright. Maybe the right advice for a person is not to sell them products.
Yes, I agree.
Maybe the right advice is to set up a budget for them and give them some realistic appraisals of their financial situation and their goals and objectives.
Yes, I totally agree with that.
Mm-hmm. But we're in a world, in Westpac and in other entities, where advisors are remunerated, at least in part, significant part, by the revenue that is brought in from their sale of products.
Yes, I agree with that.
So how does that work? How can an advisor be relied on to give appropriate advice to a customer in circumstances where their remuneration is dependent on whether they sell that person products?
So to go back to your first point, we have hundreds of situations where there's strategic advice with no product that we charge a customer a fee. We also have a significant amount of cases every year where it's actually in the customer's best interest not to do business with us. What they've got in place is actually really good. And we're constantly telling customers, just stay, you're doing well, and we collect nothing for that. Where there's a genuine need and there are product solutions that are required, well, yes, we will construct the portfolio or put the risk in place. Yes, that goes towards their outcomes within the scorecard. And as you've seen in my statement, the changes that we're about to make to our remuneration model are significant. Revenue will not be the hero item, and frankly, for most of my advisors, it never has been the hero item, but I do think the time is right to help me manage the perception of conflicts, and hence why the significant change.
I want to come to your remuneration changes. I will
course.
do that. But for now, I want to put to you that even with the changes you're going to make, the revenue brought in by the advisor is still a component of their remuneration.
Yes, but we can have that conversation.
But it is, isn't it?
It is a small component. Yes, it is.
It is a component. And what I want to squarely put to you is that although you say you have examples, perhaps large numbers of examples of advisors within Westpac who tell customers they should do nothing, that your system gives them no incentive to give that advice because they are still rewarded if they sell that customer a product.
I totally agree. The situation where an advisor says to a customer, you're doing awesome, stay what you're doing, there is no incentive to them
Yes.
apart from feeling like they've actually done the right thing by that customer.
Yes. All right. Thank you for answering those larger questions, Mr. Wright. Can I just come back briefly?
Just before you depart from them, you say it is a frequently occurring case where the advisor will tell the client, no, you've done the right thing, do nothing more. Does that event find any reflection in reporting to senior management so that senior management can, or more senior management, can get some idea of the way in which the particular advisor is approaching his or her task?
Within my business, no.
So, again, just to follow it out one step further, leave aside whether there's a direct reward of money for giving that sort of advice. How, if at all, does the immediate supervisor or the more senior management know whether the advisor is taking that kind of approach?
They wouldn't know systematically. They potentially could see it as a part of their supervision program when they're doing the live observations with an advisor and a customer, and at that conversation they may say, look, but it would be very ground level, not systematic.
And in particular, does it follow that it's not something that's taken into account in determining promotion within the organisation or added responsibility or other general advancement in the organisation?
Yes, that would be a fair comment.
Because I think you've probably answered these questions fully and answered them as or, but I just want to make sure that if there is more you want to add, you have the chance to add it. Come back to what I think I was saying to you yesterday. I think that what employees pursue is often affected by what they see their immediate supervisors and more senior people as valuing. Is that, do you accept that to be so? In effect, how does the frontline advisor recognise that this kind of approach, no, your portfolio is superb, you've done a great job, do nothing more, nothing I can do to help you, have a good day. How does the frontline employee see that as something which the organisation values?
Unfortunately, they don't. I haven't done enough to make sure they feel that.
Well, forget beating up on yourself, Mr. Wright. Can you offer any way in which that sort of thing, trying to find a neutral expression, could be reflected in management structures, organisation or anything of that kind?
I can. As I mentioned yesterday in the conversation around consequence management and through the Professional Service Council, we have an independent, I wouldn't call him a director, just an independent observer, Simon Longstaff, that is constantly challenging me to the spirit of your conversation around how do you elevate good behaviour, how do you recognise other themes as opposed to what you do today. I'm sure he's listening, he'll be latching on to the comment around the times that we say to a customer, keep doing what you're doing. So I think it's the right question. We're refreshing our remuneration structure at the moment, which involves our scorecard. I think we need to take it to another level, and we will take it to another level.
Yeah, thank you. Yes, Ms. Orr.
Mr. Wright, I said I was going to return briefly to Mr. Smith.
Mm-hmm.
In your statement, you say that one of the reasons that Mr. Smith has given inappropriate advice was for the purpose of increasing or maintaining his share of revenue.
Yes.
Mm-hmm. In other words, to increase his monthly bonuses.
Yes.
And why do you say that? You
The
deal with this at paragraph
I do.
391 onwards, if that helps.
No, I'm very clear on this. The reason I feel that Mr. Smith has looked to maximise his share of revenue is, in essence, sort of three themes. The first one we spoke about yesterday was the capital notes issue, and obviously the stamping fee that's associated with that. That was a real alarm bell for me. The second one was there's cases there where the provision of ongoing advice has not been provided, which is unacceptable, and it was systematic. It looked to me deliberate. It's unmoral, and I was very disappointed with that. And I think the only justification I could see was to sort of maintain your level of remuneration. And the third theme was, we just touched on the point around, if it's in the customer's best interest to stay where they are. There was too many cases for my liking where the product replacement, I couldn't see any real value for the customer.
So one of those three themes that you mentioned then related to charging fees without providing the service. How often do Westpac financial advisors charge fees for ongoing service?
So there is 64,000 customers within BTFG that are on an ongoing advice arrangement per annum with BT Financial Advice and BTGL.
And what does that represent as a proportion of the total customers?
So the total, this is directional, there's about 200,000 customers all up. A big chunk of those are self-directed or unadvised. So 60,000 of 200 would be 30%. I think it would be more in the BTGL. I think the mix would be much more towards ongoing advice.
BTGL being?
magnitude and securitor.
Yes.
Yeah.
Yes. So you're distinguishing between your employed financial advisors and the authorised
That's correct.
representatives.
Yeah.
And what sort of numbers do you think would apply in relation to the authorised representatives part of the business?
So the 64,000 is pretty much half-half. Most of their customers are actually on an ongoing advice relationship. There isn't many customers that are not.
Most of whose customers? The authorised representatives'
correct.
customers?
That's correct.
So it's the majority of those who are on an ongoing
That's correct.
fee arrangement. So it's commonplace, is it then, to include an ongoing fee service within an advice provided?
Yes, absolutely.
Mm-hmm. And what is it that is generally being provided pursuant to those arrangements?
Yes. I think before FOFA, the conversation was much more around performance. Post-FOFA, and particularly now in our businesses, the conversation is much more around strategic advice and reassurance. This is a very complex system. You know, it was interesting reading the Treasury report. You know, I think there was 12 regulatory guides that have been provided since FOFA were updated, which put significant change in the system. There's been 9 pieces of statute and legislation. There's been 4 significant wealth reviews. All those things change the system, potentially change rules. So the intent of ongoing advice is to have a conversation regularly to ensure that your strategic advice is going to ensure that you meet your goals and aspirations. It's reassuring customers that they're on track, but just as importantly, it's reflecting on all those changes I just mentioned. And as the true professional, it's allowing, ensuring the customers' needs are met, and if we need to change or rebalance or reposition to ensure they meet their goals, then that is the purpose of ongoing advice.
So do I understand that answer then to mean that the things that are generally provided under a fee-for-service arrangement are a regular conversation between the advisor and the customer, reassurance to the customer about how they're tracking,
Yes.
and thirdly, reflection on the various legislative and regulatory changes that are occurring?
Perfect. I'll just add one more.
Yes.
In terms of that strategic advice conversation and reassurance, there will be often changes that will need to happen within the portfolio to make sure that they can still achieve their goals. Sometimes it's actually also an opportunity to hold the customer accountable to what they were going to do, e.g. save more money so they could reach their dreams. So a lot of the time it keeps them honest as well to their plan.
Do customers tend to come to an advisor asking for an ongoing fee arrangement? Do they come wanting a service to be provided over multiple years, or do they come to an advisor because they have a requirement for insurances, a requirement for advice about their superannuation, some other temporal requirement that they want advice on?
No, I don't think they would come and ask for ongoing advice.
So why do they end up with ongoing advice?
For all the reasons I just said.
Because the advisor believes those things warrant, the things that you've referred to warrant the provision of ongoing advice for a fee.
Absolutely, and as a part of the conversation and the advice, we would explain that. Yes, there's lots of customers that would decline ongoing advice, but a lot of customers accept it. A lot of customers are very thankful they've had it. You know, I meet a lot of customers, and some of these customers we've had for over 20 years, and they've been on ongoing advice, and they're just glowing of the help that they've had over that journey. I mean, they're not experts, and we are.
I want to come to your remuneration changes, Mr. Wright, which you've mentioned a few times already. You say, as you have, that one of the reasons Mr. Smith gave inappropriate advice was connected with increasing or maintaining his share of revenue. And as a result of that and other instances of that, I assume these changes to your remuneration framework have been made. Is that right?
That's definitely an element, yes.
Well, can you explain for us in brief terms what the changes to your remuneration system are?
Yes, I can. So briefly, on the 1st of October this year, we'll no longer have a share of revenue scheme, which is very common within the industry. We will no longer pay bonuses monthly. We'll have a balanced scorecard that is based off 80% non-financials and 20% financials, being the revenue component you were referring to before.
Yes.
That's well ahead of the Sedgwick report, which recommended scorecards to be no more than a third by 2020. The other significant thing that I'm very proud of, and I think this could be attractive to a lot of advisors in the industry, the way that we will set their fixed pay, the last bit I should say, there will be a bonus of a balanced scorecard, but it will be paid annually. The way that we'll be setting the salaries of advisors and their target bonus, I think is going to be very attractive to a lot of practitioners in the industry. In essence, we'll be setting people's remuneration based off their qualifications, based off their competency as an advisor, based off the standards that they go through with customers. I probably will be throwing in one other theme, and it'll be thank you to the Commissioner around how do we elevate moments of real best practice. The key will be it will need to be demonstrated. So we will not set people's remuneration fixed or variable based off how much money they write.
But you will still have 1/5 of the scorecard dedicated to financial measures.
Yes, we will.
Yes, and why is that?
We debated this long and hard. The reality is we want to have a viable, sustainable, professional business. Hundreds, thousands of Australians need advice. We're not a charity. We need to make sure we get the commercial reality right. We need to make sure we act in the customer's best interest. Having the revenue lens just ensures that people are clear whether we are at minimum moving forward. If we're declining in revenue, that would be a real concern in terms of the health of our business.
So you considered whether to move financial advisors across to a completely fixed remuneration package?
Oh, no, not fixed. No. We considered removing revenue from the scorecard and having 100% non-financials, yes.
So always a variable component.
Correct.
But in the end you decided there needed to be a financial component to the variable component for the profitability of the business generally. Is that right? For you explained to me.
Sorry. No, that was not the reason. If we get this right, the profitability of the business will be sorted. The point was we want to make sure that people are very clear on the health of our business. So if revenue is declining, then our business is not healthy, and that is a concern for me, because what it means is maybe the viability of the business could be in question, and therefore maybe we could be in a position where it's going to be difficult to help customers.
Can I just understand that a little better, because we're talking about revenue generally?
Yes.
Is the revenue fee income?
Yes.
And product income?
So, yes for insurance, no for grandfathered.
You go on, Ms. Orr.
Well, I'm just trying to understand why you made the decision to keep that 5th component in the balanced scorecard, and you're talking about the viability of the business. You've drawn a distinction with my language, which was about the profitability of the business. You resisted that, but it seems to me that ultimately when you're talking about these things about the health of the business, what you're talking about is Westpac continuing to flourish, continuing not just to be viable, but to be doing well, and that you want, as part of that strategy, to have financial advisors still incentivised to generate revenue for the business through fees and sale of products.
I want our advisors to be aware of their contribution, and one of the KPIs is by helping customers, whether it's collecting customer fees, whether it's collecting commissions for meeting unmet risk needs. I want them to know that they're growing their business every year, because it's an early indicator of the viability of the business. Just on the, thank you for raising your clarification, Commissioner, the grandfathered product commissions will not go into their revenue from the 1st of 18.
And why is that? Why have you made that decision, Mr. Wright?
2 reasons. The reality is it's actually not a big amount for BTFG, and it only impacts a handful of our advisors. And secondly, as we look to really drive the profession, driving our culture is critical, and culture is made up of messages and symbols. This is a really important symbol. The way that we go forward is helping our customers, showing value, and those customers, if they see value, will have the opportunity to enter into an ongoing advice relationship. If that doesn't suit, then we won't be collecting a commission.
You spoke before, earlier in your evidence, Mr. Wright, about a first mover problem in relation to grandfathered commissions. Is this you taking a first step in relation to grandfathered commissions?
So if you're referring to my statement 3, is that correct?
I was referring to something you said earlier in evidence today about when I asked you about your views about grandfathering.
Yep.
And you said that you'd be, this wasn't your word, but something to the effect of delighted when we move to a world where there aren't grandfathering arrangements for insurance and superannuation. But in the context of that answer, you also talked about a first mover problem and competitive disadvantage.
Yes.
If there was a change to the way an entity dealt with grandfathered commissions. I'm just trying to reconcile that answer with the fact that your new remuneration system is not counting grandfathered commissions in the revenue component of the scorecard.
Yes. And just a little clarification, when I talked about grandfathering, it was only super and investments,
yes.
not risk.
Not what, sorry, Mr. Wright?
Not risk.
Not risk. And what's the distinction there?
Sorry, insurance.
Insurance, thank you.
Yeah, sorry. I can see why the clarification is important. In essence, through this conversation, I've got sort of 2 hats on. The first hat is the leader of our advice business, which is product agnostic. And your point around me deciding to remove grandfather commissions for super and investments as at the 1st of October is an important symbol in my advice business. So that's the first thing. Mm-hmm. Personally, I believe in a fee-for-service arrangement, and I would be delighted in the future, whether it was 2 years, 5 years, 10 years, that we're there as an industry. So that's the first bit. The other hat I've got on is a part of my statement 3 was representing BT to talk through conflicted rem. And in that statement, we do mention the first mover disadvantage, if you like, and the unilateral consequence of a product provider stopping paying grandfather commission. So that's the 2 hats I'm playing.
Yes, I see. Why is insurance carved out in your answers in relation to the grandfathering provisions?
Well, firstly, insurance was never a grandfathered product. It was an exempt product, and it was therefore allowed. The reason being back in 2013 was, rightly so, the legislators were concerned that if they also moved to no commissions and in essence fee for service, that Australians wouldn't be able to afford insurance and therefore we'd have this huge underinsurance. So they engaged Trowbridge to do a report and as it clearly states in the Treasury paper, that was legislated through the life insurance framework, which came into effect on the 1st of January 2018. In essence, by default, that legislation has made those commissions permitted. And in essence, it's going to reduce the upfront commission for insurance to 60% of the premiums by 2020 and the trail to 20% and increase the clawback period from 1 year to 2 year. I actually think that is the right decision. Do I think we could get to a world where it's fully fee for service on risk only? There are providers doing it. I think it's possible for the right customer, and it's probably more a more affluent to high net worth customer. I don't think we can quite get there until we have better capability around providing unmet risk, maybe self-directed for customers via technology. And I think if we get to that point, then I think we could. But, you know, in essence, I agree totally with the life insurance framework that's just been legislated.
But is it enough? Why should insurance continue to be treated differently?
Because the reality is it subsidises the cost of advice, and I'd much prefer to have Australians insured as opposed to not having them insured.
And do you think they won't pay for insurance under a fee system?
I think it is, the cost will be too prohibitive at the moment, and we're not quite ready for that. But I do think it's something we need to keep challenging ourselves. But as I said, I think we've got to have a stronger capability for those customers who potentially can't afford the fee or the advice, and we're not quite there yet.
Can I just ask you to look at a document while we're on this remuneration topic, Mr. Wright, which is WBC 506-002-0167. Now, this is an agenda, and if we have the second page up, we'll see the start of a memorandum for the BT Financial Group Divisional Remuneration Oversight Committee. It relates to a meeting in August last year, at which we can see you were in attendance.
Yes.
Yes, and are you familiar with this document, Mr. Wright?
Very.
And can I ask you to look at WBC 506-002-0176? Do we see here an assessment of, as at August last year, your remuneration and reward principles?
I do.
Yes, and do you agree with the comments expressed in this document?
Any particular line?
Well, I think each of them are important. We can see that the left-hand column is about the principles of the system, and the right-hand column is a comment on the effectiveness of that. So the very first one is that a principle of your system is to align remuneration with customer and shareholder interests. And the comment is that the share of revenue plan emphasises revenue, potentially placing customer interests at risk.
Yes, I see that.
Yes, do you agree with that?
I didn't author this paper, and
No.
I debated significantly some of the language from the author. However, do I think the spirit of what she was trying to say around could a share of revenue potentially impact the interest of customers in certain instances? Yes, I would agree with that.
As in Mr. Smith's instance.
Yeah, exactly.
And the second principle of the system was to support an appropriate risk culture and employee conduct. And the comment is performance assessment and variable remuneration arrangements encourage revenue generation over conduct and risk management. Do you agree with that?
I didn't agree with that at the time, in the sense that it's very clear that there is a gate opener, which we talked about yesterday, in terms of their risk rating. The bit I did agree, though, is that our reliance on the risk rating, as we discussed yesterday, is the real issue.
Well, speaking of the gates, the third principle is about differentiating pay for behaviour and performance in line with our strategy and vision. And the comment is, revenue is the primary performance measure. Behavioural gates are in place theoretically. However, there is no evidence that a behavioural assessment occurs for all advisors on a monthly basis.
So I would agree with that comment. Factually, though, there are situations where advisors are knocked out because of a 1 rating. I can think of a couple I was involved in last year, and one in particular had significant impact on their remuneration.
And can we look finally at the last principle of the remuneration and reward system at Westpac, which is to be simple, flexible and transparent. And the comment we see is that share of revenue arrangements for both partners and advisors are incredibly complex. In December 2016, a review of past payments was requested by the General Manager of Risk and the General Manager Reward and Performance, and could not be completed due to complexity. Deferral arrangements for advisors and partners are similarly complex and can be harmonised in line with the group deferral framework. Do you agree with that, Mr. Wright?
Yes, I'd agree they're complex.
Yes, and what's being done about that?
We're putting in a new remuneration structure on the 1st of October 2018.
So, sorry, I should have asked a different question. Are you dealing with the complexity in the new system that you're putting in place?
We are.
Okay. Now, could I tender this document, Commissioner?
Exhibit 2.117 will be BTFG Divisional Remuneration Oversight Committee, August 17, WBC 50600200167. Just on that simple, flexible and transparent idea, Mr. Wright, that's one of the chief challenges, isn't it, of devising some remuneration strategy that rewards good behaviour that doesn't reflect in a dollar sign at the end of it.
Yes.
And that's the chief challenge in it, isn't it?
It is, Commissioner, and I think the realisation for us is as we move to this new remuneration structure, some of our people won't embrace it, and that's fine. They will make a choice, which will probably be to go elsewhere. So yeah, I think you're right. It's a big business. For some people, this won't suit. I think a lion's share, though, it will.
But any system that's based on ultimately subjective assessment is one where those who don't benefit from it are inclined to see favouritism at work.
Yes,
Is that
I'd
right?
agree with that. Yes.
And so you've got a difficult and complex management problem, I suspect, correct me if I'm wrong, in trying to frame a remuneration policy that is cast other than in terms that have a dollar sign in front of them. Is that right?
It is.
Yeah. Just while I've interrupted you and going back to the remuneration changes, I understand the revenue component, the size of it has diminished, but the revenue component does include reflection of the amount of insurance the advisor sells. Is that right?
Yes, there's 4 revenue components. One is life. And yes, I suppose in the few instances, if someone wants to over-insure someone to maximise, yes, that is a possibility.
Yes. Yes, Ms. Hall.
Commissioner, I attempted to tender that last document, but Mr Hosking helpfully reminds me that I have already tendered it because I took Mr Wright to another part of it yesterday.
So Exhibit 2.117 is redundant?
Yeah, it is. I'm sorry, Commissioner.
I can hardly wait until we get to Exhibit 2.117 properly then.
Won't be long, Commissioner. In your discussion with the Commissioner just then, Mr Wright, you talked about some advisors will make a choice as a result of these changes and they will go elsewhere. Mr Smith is an advisor who made a choice to leave Westpac, to resign when your investigation was underway and allegations were made. And in your statement, you talk about the systems and processes that Westpac has in place to prevent, detect and remedy inappropriate advice. And one of the measures that you refer to there is your recruitment processes. You say that one of the things that you rely on is conducting due diligence about new advisors at that recruitment stage. And in September 2016, the Australian Banking Association released a reference checking and information sharing protocol. Are you familiar with that document?
I
am. Which relates to recruitment of advisors and the sharing of information about advisors between financial services entities.
I do.
And that protocol commenced in March 2017. I'm sorry, you might just need to say...
sorry, yes.
Thank you. And does Westpac subscribe to that protocol?
We do.
And since when has Westpac subscribed to that protocol?
We are a founding member, along with another 7 large banks and institutions, making 8 in total, and I think there's 40 licensees who are subscribing in total.
So do you recall when that was? That was at the time of the commencement in March 2017, is that what you're saying?
Yes, that would be my understanding, yes.
And what does the protocol require Westpac to do when hiring a new financial advisor?
So the protocol, in essence, is not intended to judge character. There's other processes for that. This is a protocol and sharing information to determine the compliance history and capability of the potential advisor joining, and also is there any issues or matters that need to be disclosed, such as investigations or large complaints.
And what does it require Westpac to do when another licensee is hiring a former Westpac advisor?
So I can't remember, I think there's 6 questions that you go through. So we would complete those questions, including their compliance history, and detail that, including any investigations and any large customer complaints.
Can I show you a copy of the protocol,
yes,
Mr. Wright, which is RCD 0021 003 0009. That is the ABA protocol, Mr. Wright.
Yes, it is.
And we see the obligations on subscribers at 0010.
Yes.
We see there that subscribers are to make reasonable endeavours to meet the requirements of the protocol, to give and receive information in accordance with the protocol procedures and timeframes, and ensure that all internal policies and contractual arrangements entered into with employees from the implementation date do not preclude the sharing of information in accordance with the protocol.
Yes.
Can I tender that document, Commissioner?
Exhibit 2.117 will be ABA Banking Industry Conduct Background Check Protocol, RCD 0021 0003 0009.
Mr. Wright, do you know if Mr. Smith is still working as a financial advisor?
I do.
And do you know which licensee he currently provides financial services on behalf of?
I do.
And who is that?
Based off the Financial Advisor Register, the ASIC one, it's Dover.
Dover Financial Advisors?
That's correct.
So you've looked at ASIC's Financial Advisor Register for Mr. Smith?
As I have for lots of advisors, yes.
Yes, and you've seen from that that Mr. Smith joined Dover Financial Advisors on the 27th of April 2015, shortly after he left Westpac?
Yes.
And he's still there with Dover Financial Advisors?
I'm not sure. He's still authorised, so.
And did Dover contact Westpac for a reference in relation to Mr Smith in 2015?
They did.
Could I ask you to look at DOV 0001 0001 0098? So this is a letter from Dover Financial Advisors to Westpac dated the 6th of May 2015, about 6 weeks after Mr Smith resigned from Westpac at the end of March 2015. And you can see from this letter that Dover asked Westpac if it was aware of any circumstances or actions that might affect Mr Smith's ability to provide advice honestly and fairly, of any client complaints which may give rise or had given rise to a claim, and whether he'd been subject to any action, investigation, inquiry or audit concerning his character, competence or conduct.
I do.
Yes. Do you know if Westpac responded to this letter?
I do.
All right. We'll come to that. I'll tender this letter first, Commissioner.
Exhibit 2.118, letter Dover to Westpac, 6 May 15, DOV 0001 0001 0098.
So to be clear, Mr Wright, by this time, on the 6th of May 2015, Westpac had suspended Mr Smith,
That's correct.
and Westpac had made serious allegations against Mr Smith,
That's correct.
and Westpac had accepted Mr Smith's resignation in response to those allegations.
That's correct.
And the first investigation report into Mr Smith's files, which had identified serious deficiencies, was shortly to arrive on the 13th of May 2015.
Yes.
All right. Can I ask you to look at DOV 0001 0001 0670? This is an email from Dover, Mr Peter Thompson at Dover, to Mr George Kovanis, to a representative of Westpac. And we see from this email that Westpac advised Dover that it was not their policy to give written replies with respect to reference checking, nor to go into any specifics. Do you see that reference in the first paragraph?
I do.
Why not?
At the time, that was our approach. Mr Kavanis sought legal opinion, but at the time that was our approach. Clearly that's not the case today.
Just one question. I see that the addressee of the email is redacted.
I'm not sure why that would be the case, other than
Nor
that
am I,
the
and-
contact details, I understand, were to be redacted. I think this is a redaction made in error.
Right.
The name of the person who sent the email, I do not understand to have been the subject of a non-publication direction. I'm receiving confirmation.
Right, okay.
Now, instead of replying to Dover's written inquiry in writing, there was a telephone call between Mr Kovanis and Mr Thompson.
There was.
And we see that Mr Thompson has summarised that telephone call in this email. During our call, you responded to my questions in the following manner. Would you please advise if you are aware of any circumstances or actions that may affect his ability to provide financial advice honestly and fairly? The response was, we have concerns regarding his conduct. Are you aware of any client complaints in connection with the above named which may give rise or has given rise to a claim? Answer, we have concerns regarding his conduct. Has the advisor been subject to any action, investigation, inquiry or audit concerning character, competence or conduct during his or her time at your organisation or at a time of resignation? The answer was, there is an ongoing investigation taking place. So those were the oral communications made over the phone by Mr Kovanis. And do you see there that Dover put on the record in this email that it wanted an immediate response in respect to the ongoing investigation taking place once your findings have been concluded. If the investigation concludes that Andrew Smith has committed or was likely to commit a significant breach, Dover requests that we are informed as soon as practical and forwarded a copy of ASIC's form. Please note that this must be lodged with ASIC no later than 10 days after you become aware of a likely or committed breach. If ASIC is not notified for whatever reason, please also communicate this to Dover. You see that, Mr. Wright? I tender that document, Commissioner.
Exhibit 2.119, email Thompson to Kavanis of 14 May 15, DOV 0001 0001 0670.
Do you think, Mr. Wright, that that disclosure was adequate in circumstances where Westpac's investigations had by this time revealed serious deficiencies in Mr. Smith's conduct?
I think today's standard, the short answer is no. Mr. Kavanis had legal opinion and he followed that legal opinion. It was clearly a significant case for us that we're working through. The reality is, though, Mr. Kavanis was very clear. There is issues with the conduct and an investigation is taking place.
But Mr. Kavanis was also very clear that he was not going to tell Dover what the nature of those issues was.
Mm-hmm. I agree with that, and that was the advice he was given.
And do you stand by that decision?
I have no reason not to stand by that decision.
Well, what do you say to the need to protect Mr. Smith's future clients from his conduct and the importance of licensees sharing information with each other to protect those clients?
Critical.
Yes, and this is not consistent with that, is it?
No, and today it wouldn't meet today's standard.
Mm-hmm. Can I show you another document, Mr. Wright, which is DOV 0001 0001 0288. So we see from the first email here that on the 30th of June 2015, and I'll just remind you that the last communication we looked at was dated the 14th of May 2015. So on the 30th of June 2015, Dover made a follow-up phone call. Mm-hmm. And as the email that we have here records, Westpac maintained its policy not to provide written correspondence about its concerns with Mr. Smith.
Yes, that's correct.
And Dover pressed again for any information that had come to light in the investigation, including any report to ASIC.
Yes.
I tender that document, Commissioner.
Exhibit 2.120, email Thompson to Kavanis and others 30 June 15, DOV 0001 0001 0288.
So by this time, Mr. Wright, on the 30th of June 2015, the first investigation report had been received.
Mm-hmm. Yes.
And the supplementary investigation report was close to being finalised. It was finalised in July 2015.
Mm-hmm. Yes.
And following the finalisation of that supplementary report in July 2015, you've told us that some months later, in November 2015, Westpac notified ASIC under a serious breach notification about Mr. Smith's conduct.
That's correct.
Did Westpac ever communicate those matters to Dover?
Not that I'm aware of.
Why not?
Well, clearly I wasn't involved in these conversations. I wish to help this commission I'd found out more information on the point you're raising. I just don't know. I apologise.
Do you accept that in a situation like this where Westpac has extensive concerns about the conduct of a financial advisor and Westpac knows that that advisor is moving to practice with another licensee, that the community would expect Westpac to communicate those concerns to that further licensee?
Yes, I'd agree with that.
Mm-hmm. And not just allow Mr. Smith to continue to provide financial advice at a new licensee?
Yes, I'd agree with that.
Thank you. Now, another measure that you talk about in your statement, Mr. Wright, as being preventative and to detect inappropriate advice, is conducting compliance audits.
Yes.
And you've given evidence about compliance audits both in relation to Mr. Mahadevan and in relation to Mr. Smith. And in your evidence yesterday, you told me that there was a period when Westpac diverted or reprioritised resources from auditing advisors into dealing with the FOFA reforms. Do you remember that?
I do.
Now, Westpac's a big bank. Were there not adequate resources to carry out both monitoring and supervision activities of its financial advisors as well as responding to the FOFA reforms?
To put that in context, the year before FOFA, we had 186 risk officers.
Yes.
The year of FOFA, and that was a big year, the implementation of FOFA, that increased to 233, and currently we're at 254. I would argue, based off what I know today, that the level of risk officers for the implementation of FOFA may have needed to be a little more. There were significant programs going on costing significant amounts of money with significant resources. The challenge is, in our industry, a lot of the resources outside of programs are business specialists, and therefore they have to rely on the business specialists within the business, and they're very hard to replace and backfill, if you like.
Well, couldn't you have just hired external auditors for your advisors if necessary?
Yes, that could have happened.
But you didn't do that. You just reduced the frequency of your auditing of your advisors.
No. What I said yesterday is Mr. Smith's audit was reprioritised and delayed.
Yes.
That's what I said.
Yes, which I want to put to you is the same as reducing the frequency of the audits.
For Mr. Smith, yes.
Yes, and for other advisors. Surely this wasn't just in relation to Mr. Smith.
I'd only be speculating. I don't know. But for Mr. Smith, it was definitely delayed.
Yes, and it's a fair assumption then, isn't it, Mr. Wright, that it was also delayed for other financial advisors?
It appears reasonable to me.
Yes. What I want to put to you is that monitoring compliance by your advisors was not a priority.
Sorry, our advisors don't monitor. Our compliance officers do, and I would disagree with that. It is a significant priority.
Well, it's inconsistent with that, isn't it, to reduce the frequency of the audits and fail to engage extra people to perform that audit function when people were moved off into dealing with the FOFA reforms?
At that point in time, I think that's a fair argument.
Another measure that you refer to in your statement for preventing and detecting inappropriate advice is having appropriate policies and procedures in place.
Yes.
But it's not enough, is it, Mr. Smith, to have those policies and procedures in place? Financial advisors need to comply with them.
Absolutely.
And that means, doesn't it, that the policies have to be easy to locate and easy to understand?
I'd agree with that.
Mm-hmm. And would you say that Westpac's policies and procedures meet those requirements?
Are they easy to locate? Yes, they're within a central depository. Are they easy to understand? There's some range in that for sure. So I'd say yes, you can find them, and yes, you can read and understand them as a professional.
Mm-hmm. What about the document I took you to earlier today and yesterday, Mr. Wright, which was the memo to the BT Financial Group Divisional Remuneration Oversight Committee at the meeting you attended, which described the policies as incredibly complex, so much so that a review of past payments couldn't be completed due to the complexity?
Yes, I think that was a very narrow conversation around remuneration. So do I agree that the remuneration policy and structure and system is complex? Absolutely.
Do you know how many policies and procedures are in place across Westpac relating to the provision of financial advice?
I heard as a part of our control environment review program, and one of the themes is around policies. I think for advice, there was 54 policies with a strong lens around advice. There's also group policies, doing the right thing, fraud, money laundering, all those anti-money laundering, I should say.
Are you including in your calculations there policies and procedures under the different brands that Westpac operates under?
No, sorry, that was just for the salaried channel.
Yes, and if we move into your authorised representative world as well, how many policies and procedures are we looking at?
I don't know.
You estimate many more than the 54 core ones that you've identified for your employed advisors?
No, I wouldn't. There would be a lot of similarities, but it wouldn't be many more. I think it could be slightly less, actually.
Slightly less?
Yeah.
So are they not governed by the Westpac policies as well?
They are.
They are. So there are additional policies that govern them from their own dealer groups?
There is a fundamental difference between the salaried and the authorised. Obviously, the authorised are small businesses. They're not employed. They're small businesses, partnerships, corporate entities that have an owner and a principal. Within that structure, they will have additional policies to deal with their authorised reps.
Yes.
To complement the ones that we provide. So hence, BT may have a smaller suite
Yes.
for them to adhere to, but then they've got their additional.
Could I ask you to look at WBC 10400021774? This is a draft report for Westpac from Deloitte.
Yes?
And it's stated, we see down the bottom, April 2018.
Correct.
So this is a report that Westpac has commissioned from Deloitte, which is an advice and services review. Is that right?
That's correct.
And what Westpac has asked Deloitte to do, we see at page 1775 of this document. Deloitte has been engaged in the first paragraph there, we see, to provide advisory services to assess the design of its advice and service delivery framework to determine if BT Financial Group's advice process and control environment is adequate to provide quality advice outcomes and delivery of service.
Yes?
And can I ask you to look at 1794 of the document? You see that one of the findings in this draft report is that there is a proliferation of tools and ill-defined practices at an advisor policy level to support the provision of quality advice.
Yes, I do.
Do you see in the second paragraph there that the advisor policy governance framework drafted in 2010 to support ongoing maintenance of advisor policies was never implemented completely?
Yes, I do.
And 3 lines down, in addition, advisor policies are high level and are not supported by practical guidance to enable advisors to understand what is required of them.
Mm-hmm.
And in the final paragraph, advice tools and templates are managed and maintained by the advice documentation team and are stored on BTAS, the advisor intranet. However, there is uncertainty around who owns a number of tools and templates, and changes or new tools have been created outside of the advice documentation team's standard change management requirements. The result of this is that the changes may not have received appropriate sign-off, may not comply with regulatory expectations, and there are multiple versions of templates stored in multiple locations across the business rather than in the one-stop shop BTAS. And there's a reference there to work underway to create a matrix of all advisor tools and templates, the owners and the location of the documents. Is this an accurate description of the situation at the moment, Mr. Wright?
I would say no. This is a draft document. It is an independent report from Deloitte on two things. One you mentioned around the design assessment of our controls. Another is assurance standards on 5 of our big controls.
Yes.
This report has been provided to the business, e.g. the draft, to fact check the information, which is happening as we speak. There's some elements, so this is 1 page in 40. There's some
Yes.
elements in here I do agree with. There's some elements in here I disagree with, and there's some elements in here I'm not fully clear on.
So this is the views of an independent consultant.
Yes.
Who's been tasked to look at your policies and practices. You don't accept that these are accurate findings?
As I said, there's some sentences in here that I do.
Yes.
There's some that I don't, and
So
there's
what
some that I'm
don't you
unsure.
agree with, Mr. Wright?
Well, I think the first piece is the second paragraph, first sentence. So yes, the framework potentially may have not been refreshed. However, policies within the framework have been constantly refreshed, and we've seen that even with consequence management as we went through yesterday. The complication that this doesn't pick up is the ever-changing business. We have now split our advice delivery service business, our back-end service, into a different division of BT. So there's just more information needs to be provided. I do agree with the comment around our policies. We are good, really good, at telling our people what to do. We are very poor at showing them how to do it. And one of the things that they draw out, which I think is spot on, is within our policies, yes, there's going to be a tell piece, but how do you also show them how to do it and put it into practice?
One of the things you referred to in your answer there was, again, the consequence management system,
Yes.
which we discussed yesterday. And one of the things that you said yesterday that I want to come back to is that there were big changes to the consequence management system that were planned in 2016, but that those changes were watered down significantly for business prioritisation reasons.
Yes.
Can I just ask you to explain that further?
Yes, so during that period there was significant programs after FOFA, and particularly all the changes we made in 2014. There were still programs of work taking place under the banner of changing the face of advice, and consequence management was one of them. It was a funded program. We spent a significant amount of time understanding the issues and redesigning how we take it forward. There were higher priorities at that time in our business, so unfortunately.
What were they, Mr. Wright?
The establishment, so if I reflect on the phases, so 2013 was a year of FOFA, 2014 was a year of visibility, 2015 was the year of taking action and reporting, and 2016 was the year of, let's just say, remedying. We did not have a structured program in place to deal with the advisors that we reported in 2015. We had to create one, an advice review team. That team took up significant amounts of resources that weren't funded. The business had to find a way. It was critical that we did that program, and it was in essence trying to make right from right. It was just that right was bigger than that right.
Too many problems to fix with too few people,
There was a lot of problems to fix.
and too few people to fix them.
Well, I think the reality is, I would debate that. We've got nearly 4,000 people in our organisation. The problem is they haven't all got the exact skills that you need, and that's a challenge. But we haven't got a shortage of people. Far from it.
You didn't have enough people to go ahead with the changes to the consequence management system that you had in place, that you had in mind, I'm sorry.
We didn't have enough specialist resources, and we didn't have enough money to make the changes, as I mentioned in question 6 of my statement, particularly around automating some of the incidents, which was millions of dollars.
You referred then to the BT advice group that was set up at that time.
Yes.
That was where some of this money went, is that right?
So the advice review team, yes.
Yes, and that program was a remediation review program, and you say in your statement that that program has so far paid to customers who have received inappropriate advice $14.692 million.
That's correct.
Thank you. Has Westpac made any provision for how much it expects that program to pay to customers in the future?
I'm aware of provisions for individual advisors within that program, as we discussed with Mr. Smith yesterday, the provision of $600,000. I'm aware of a provision for another program, which I state in my statement. I'm 100% sure there is a provision set aside for the advice review team. I just can't exactly think of the number.
Okay. I tender this Deloitte report, Commissioner.
Draft report of Deloitte, April 2018, WBC 104-002-1774 is Exhibit 2.121.
I assume, Mr. Wright, this report has not yet been finalised.
No, it's been fact-checked.
And when do you expect it to be finalised?
I think there would be lots of people working on that right now. I'd be surprised if it's not finalised by next week.
Thank you.
And sorry, I'm speculating with that comment. I don't know.
In your statement, Mr. Wright, you describe a number of changes that Westpac's made over the past few years that you say are relevant to the provision of quality advice.
Mm-hmm. Yes.
And those changes include the remuneration changes that we've been discussing and the consequence management framework changes that we've discussed.
Yes.
And some of the changes you say are still ongoing.
Such as?
But the remuneration one.
Oh, yes.
And you say in your statement that even with all of the changes that Westpac has made since 2013 and the changes that are still coming, financial advisors, you say, will continue to provide inappropriate advice to customers.
No, I didn't say that. What I said in my statement is there could be and may be instances of inappropriate advice. I believe the controls we've put in since FOFA has reduced the number of inappropriate advice incidents significantly, and you can actually see that in Statement 1, Table 1, whereas I think 15, 16, 17, there is a significant, 18, there's a significant drop in cases of inappropriate advice. Unfortunately, I don't think I can control away inappropriate advice in every instance. Some people, the minority, may, for whatever reason, be dishonest, put their own interests before others. I can't control that away.
I understand that, Mr. Wright, but do you say as a result of the changes that you've made, there's been a drop in inappropriate advice?
Yes.
Okay.
And sorry to qualify, not what I've just made, the leaders before me.
Yes, thank you. I'm sorry, the changes that Westpac has made since 2013.
Yes.
You say they have resulted in a drop in inappropriate advice.
Yes.
Okay, and the changes that you've described in your statement have mostly been introduced after the time that we were looking at in relation to Mr. Mahadevan and Mr. Smith. Is that right?
Yes, that's correct.
Okay. Could I ask you to look at WBC 500-002-1440? Do you see, Mr. Wright, that this is a report for the BT Financial Group Advice Risk Forum dated the 14th of July 2015?
I do.
What's an advice risk forum?
An advice risk forum is a regular forum where we meet as a senior leadership team to talk about the risks in our business and emerging themes that could potentially become risks.
Okay, and you attend these forums?
I do. This one is titled BTFG. The subsequent ones that I'm sure you'll take me to are BT Advice. I definitely attend the BT Advice ones.
Yes, thank you. And do you see the key risks or issues identified in the executive summary of this document? The first one is too high residual risks. Risk number 24, inadequate or inappropriate provision of advice to customers. And risk number 21, inadequate customer account management process, which is provision of ongoing advice, services and fees.
Yes, I do.
Okay, so that's risk number 24 and risk number 21. Can I ask you to look at 1444 in this document? This is something called the advice risk heat map, as at the date of this document, which is in July 2015. And we see risk 24 listed on the right-hand side, inadequate or inappropriate provision of advice to customers.
Yes.
And do I interpret this risk heat map correctly to see that risk 24 is shown in a part of the table that suggests that it is a risk with a major impact?
Yes.
And a risk that is, as a likelihood, possible, more than 26% and less than 50%, or 26 to 50%.
Yes, you do.
So it's a possible risk with a major impact,
That's correct.
which gives it an overall characterisation of a high risk. Is that right?
High residual risk.
A high residual risk, thank you. And we see that on 1448, some of the factors that contribute to the risk are listed in this document. Do you see there risk 24, inadequate or inappropriate provision of advice to customers?
Yes, I do.
And the emerging factors include insufficient MIS, is that management information systems?
Yes, it is.
Insufficient management information systems to monitor high-risk planners in Security and BT Select. And you see also that there is a reference to an increase in planner incidents across BT Advice.
Yes.
And do you see finally that the Securitor audit ratings are outside tolerance?
Yes, I do.
What does that mean?
So what that means is, as a part of this risk control review, we also establish an acceptable level of tolerance, and that's actually metricated, or there's numbers, sorry, attached to those. So, for example, one of the current indicators is around audits, compliance audits for advisors. It's acceptable to have up to 10% failing an audit and becoming requires improvement.
It's acceptable to have up to 10% failing.
No, sorry, I should rephrase that differently. Within setting the tolerance,
Yes.
we have a range that says over 10% is unacceptable if it's above that, and therefore from a risk appetite, we don't accept it.
So from a risk appetite perspective, you have a tolerance for 10% of your advisors providing inappropriate advice.
And I should qualify that. You're assuming that every requires improvement audit is in relation to inappropriate advice. It's far from the truth.
I see.
Today, most of our advisors are failing because their record keeping is not where it needs to be, and the lens that we've put is what ASIC would expect.
That's a very significant problem, isn't it? Because if the record keeping is poor, there is no way to determine whether the advice that was given was appropriate.
There is, but ASIC's not going to do that.
Well, it's not just about ASIC, is it, Mr. Wright? Surely Westpac wants to have the ability to satisfy itself that its advisors are providing appropriate advice.
I agree. That is the standard that we set ourselves
Yes.
internally. The file needs to stand on its own 2 feet
Yes.
in our customer file management system. And if ASIC came in, they could see that everything was appropriate. The reality is,
If
that
the
is-
immediate line supervisor came in, the immediate line supervisor has to see that everything's okay.
that's
don't
correct.
they?
That's correct.
But no record, the line supervisor can't check it, can they?
Sorry, my point was poor record keeping
Yeah.
in the customer file management system. Where I was going to go is you could approach the advisor and there could be more information that fully builds out the case to show there is no inappropriate advice. But what we want to stop is doing that and have it centrally stored. The file stands on its own, and by reading it, you know it's appropriate.
Well, can I just drill a bit deeper into these tolerances, Mr. Wright? If we turn to 1459, we see there a chart in relation to compliance reviews.
Yes.
And this chart shows that at this time, in 2015, at the beginning of this program of changes that you were introducing, the percentage of files rated effective or qualified, it shows that across the various Westpac advice businesses.
Mm-hmm.
And what we don't see is the remaining percentage, which would be the percentage that are rated requires improvement. Is that right?
Within the salaried or Cat C within the authorised representative business?
Yes. We saw earlier that a single file rated requires improvement now warrants 30 demerit points, which would put you immediately in the high risk category. Is that right?
No, I don't I think if you're talking about the additional supervision that would come off the back of a failed audit, if they were at 60 and they lost 30, they would still not be on
I see.
additional. Yeah.
I see.
Yeah.
What I want to put to you is what this table shows is that consistently about 10% of files at Westpac Financial Planning, St George Financial Planning and Magnitude received the result of requires improvement
Yes.
in the period covered by this chart.
Mm-hmm.
And it shows that about 20% of the files at Securitor received that result.
Mm-hmm.
So again, just to be clear, because I want to show you another of these documents, this is at the start of the period when you say your changes are being implemented.
Yes.
Could I tender this document, Commissioner?
Report to BTFG Advice Risk Forum 14 July 15 WBC 500 002 1440 is Exhibit 2.122.
Now, can I show you a very recent version of this style of document, Mr. Wright, which is WBC 507 002 1785. So do you see, Mr. Wright, that this is another BT Advice Risk Forum for a forum dated the 31st of January 2018?
Yes, I do.
Now, could we look at the advice risk heat map in this document at 1806? So if we look for the same risk again, Mr. Wright, number 24, inappropriate provision of advice to customers, the risk of inappropriate provision of advice is still ranked high. Number 24 is still a major impact, but actually things have got worse because the likelihood of that risk is now not possible, it's likely. It's more than 51% and up to 85% likely.
Yes, I agree with that.
So things have got worse despite the changes that you've implemented.
So in terms of assessing high residual risk, yes.
Thank you. I tender this document, Commissioner.
Report to BT Advice Risk Forum, 31 January 2018, WBC 507-002-1785 is Exhibit 2.123.
And could I ask you to look, Mr Wright, at WBC 507-001-1143. This is a memorandum to the BTFG, the BT Financial Group Risk Review Committee from 6th of March 2018, about 6 weeks ago.
Yes.
What's the difference between the Advice Risk Forum and the Risk Review Committee?
The Advice Risk Forum is a division within BT Financial Group, and this report is going to the group, BT Financial Group.
I see. Could I ask you to look at 1150? And this is the BT Financial Group Risk Appetite Statement metrics outside appetite as at 31 January 2018. And what we see here are a number of metrics that are identified as outside the risk appetite as at that date. And we see that 24%, and I'm in the column about risk 24, I'm in the row about risk 24, inappropriate provision of advice to customers. And we see there that 24% of BT Group Limited files are rated as requires improvement, which is more than 15% out of appetite. Do you see that reference at the bottom of the second column?
I do. So it's not 15% out of appetite, it's above the threshold of 15%.
Yes, I'm sorry, I put that very awkwardly. So what this tells us is that more than 15% is out of appetite.
That's correct.
But what you actually have is 24% of your files rated as requires improvement.
That's correct.
So well outside your appetite.
That's correct.
And if we turn to 1151, we see there again a further reference to risk 24 at the top of the page. And we see that 29% of call audited failed the risk and compliance checks, and there anything above 10% is out of appetite.
Mm-hmm.
Is that right?
That's correct.
Okay, so again, well outside your risk appetite.
That's correct.
And if we turn to 1153, still dealing with risk 24, inappropriate provision of advice to customers, we see that within BT Financial Advice and Wealth Connect, 41% of files reviewed were rated requires improvement. And this is said to result from a new assessment program.
That's correct.
So now, as I understood it, a requires improvement file was enough for a planner to be identified as high risk, but you say not so, it's still not enough points, is that right?
So in terms of the supervision, that's correct, you'd need to be 31.
Right. But still the situation is that 41% of the files reviewed within those groups have that rating.
They have a requires improvement for
the worst
audit.
rating.
Yes,
the
they
worst
do.
rating available.
That's correct.
Thank you. I tender that document.
Memo to BTFG Risk Review Committee, 6 March 18, WBC 507-001-1143 is Exhibit 2.124.
And the final document I want to take you to, Mr Wright, is WBC 508-001-0001. This is a report that was prepared in January of this year in relation to risk 24, which is the risk of inappropriate advice being provided to customers. And we see on this first page, in the second paragraph, that this review assessed the controls, processes and governance mechanisms currently in place across the business that could impact the provision of appropriate advice to our customers. This review did not identify one key control failure or control gap that individually results in the potential for inappropriate advice to be provided to our customers. Rather, the risk of inappropriate advice occurs as a result of a number of interrelated control weaknesses across the governance, control design and operational components of the business, with heightened risk due to the current advisor share of revenue model, system complexity and regulatory change.
Yes.
And could we then turn to the control weaknesses that are discussed in this document? And the first we'll see at 0003. The first weakness, control weakness, is the BT advice policy framework.
Yes.
And the second control weakness at 0004 is the design of the consequence management framework.
That's correct.
So we've talked about the changes that have been made to the consequence management system in recent years, but as recently as January of this year, there are still significant weaknesses with the consequence management system identified in this document.
Yes, as I said yesterday.
Thank you. And at 0007, one of the control weaknesses is the effectiveness of the paraplanning control environment.
Yes.
And an improvement that you referred to in your statement was the introduction of a paraplanning compliance checklist. Do you recall that?
I do.
But this review indicates that that checklist isn't being used.
That's correct.
And we see there that in 2 of the 5 samples selected, we could not confirm whether the compliance checklist was used. Further discussions with the planning team indicated that the compliance checklist was not perceived to be mandatory and therefore was used on a discretionary basis.
That's correct.
Now, does this document and the various control weaknesses identified within it in January of this year, Mr. Wright, indicate that there is still a significant amount of work to be done at Westpac to ensure that your customers receive appropriate financial advice?
There will always be significant work. This document doesn't infer that to me, no.
But you know that there is more work that needs to be done. Is that your evidence?
Well, I think the point is, will I always be productively paranoid to make sure we do as much as possible? Yes, of course.
I tender this document, Commissioner.
Provision of appropriate personal advice, control deep dive, memorandum of 26 January 18, WBC 508001 Exhibit 2.125.
Mr. Wright, what do you think is an acceptable level of risk that Westpac customers will be given inappropriate advice?
Ideally, we could create a system, a perfect system, where there is no risk. The reality is, personal advice, the inherent risk or the natural risk without any controls is significant. It's individual, it's tailored, it's a complex system. We have put in a significant amount of controls to reduce that natural risk within that inherent practice. The residual risk we talk about is the fact that we haven't reduced all of that risk, and do I think that we will ever reduce it and have no residual risk? I don't. Now, the one thing I do, if it's okay with you, would like to make clear, the high in front of residual risk doesn't mean there's a high risk of us providing inappropriate advice and a high risk of impacting our customers. What the high means is an assessment that we do on 5 lenses. And you touched on impact and likelihood. The 5 lenses are financial, customer, our staff, regulatory, and reputation. The first three within our matrix are actually quite low, and so therefore the impact to customers assessed is quite low. Now, I don't want to be insignificant on that, because for an individual customer, that is very real and it could be quite significant. The high impact that you talked about was regulatory and reputational.
Yes.
There is a high probability that the regulator could take action against our dealer group. That is why
Yes.
the residual risk of inappropriate advice is deemed high, not because of customers, is because of the risk of regulator taking action.
And the high risk of the regulator taking action arises from the high risk that your financial advisors are breaching the law.
I'm not going to speak for the regulator, but one thing that I'm absolutely clear on is that the instances of inappropriate advice, whether determined as a breach through legal or whether possible, for every situation we have provided in Table 1, and you can see there is significant reduction from 15, 16, 17 and 18. I won't rest until that number is a zero. There has been a significant amount of work done to drive that towards zero.
You have a long way to go, don't you, Mr. Wright?
We have been on this journey for a long time. I think pre-FOFA, we needed to do more around detect, prevent, and remedy. Post-FOFA, we have done a significant amount. I think about the year of FOFA 2013, yes, it was a legislative requirement, but our business took it to another level. We didn't accept conflicted commissions July 2000 in the transitionary year. We actually went straight to a fee-for-service model. We didn't accept that grandfathering ongoing advice arrangements pre-FOFA made any sense. So every customer, pre or post, gets the opportunity to opt in. Sorry, I was about to make a speech and I'll wait.
I'm interested, Mr. Wright, in whether you think it's possible for any organisation with as many financial advisors as Westpac has to ever put in place adequate measures to ensure that its customers receive quality financial advice.
Yes,
And are you there?
I believe we are.
Even though in your statement you can't eliminate the possibility of the provision of further inappropriate advice, and even though the documents we've just looked at demonstrate significant existing control weaknesses.
In the aggregation of those controls, yes, but the reality, as I said, there is residual risk in the provision of advice. We haven't controlled away all of it. I don't think we ever will. The most important thing to me, though, is that risk is not high to customers. That risk is deemed high because of the regulatory impact.
Yes, I just want to be clear about that. It's not deemed high by Westpac. It might be deemed high by customers who are affected by the inappropriate advice, but in your matrix it's not deemed high.
I would totally agree with that, and I made that comment, and I
Yes.
think yesterday we saw a prime example with Mrs McDowell. I totally agree.
Thank you. I have no further questions, Commissioner.
Thank you, Ms Orr. Does any party other than Westpac seek leave to examine this witness? Very well, Mr Sheehan.
Commissioner, thank you. Mr Wright, just a few more questions, if I may. You were asked this morning about a summary of the circumstances of Mr Smith's case that was given to ASIC.
Mm-hmm.
Do you recall those questions? And the document is WBC.501.004.6906. It's tab 91 of your exhibits in W1.
Ah, I'm already on it.
And
Yes, I do.
And you were asked in particular about the text at paragraph 19 on page 6909. Yeah.
Yes.
You'll see in subparagraph in each of the sub-paragraphs there's a reference to a document by a doc ID number, WBC dot something, something, something.
Sorry, are we in 19B?
19A and B in each of those paragraphs?
Yes, I do.
Yes. Do you know whether documents were made available to ASIC as part of the provision of this summary?
I don't know.
Oh, thank you. Going back to yesterday, or perhaps still today, I should say, Mr. Wright, you were asked some questions about the new remuneration structure, and you said, and you had mentioned in your statement, that it will be based around, that the variable part of the remuneration will be based on what you called a balanced scorecard.
Yes.
Of which 20% will be referable to a financial metric.
Yes.
But I think you had also said that it was not a share of revenue.
Yes.
Can you explain what kind of financial metric it was if it wasn't a share of revenue?
Thank you for clarifying. The revenue metric that will be in the advisor scorecard is the total customer revenue, so all the customer fees that are received, any life commissions received. In essence, it's the total revenue. It's not a share of. It's the amount of revenue that they've generated over the period.
Thank you. And of the 80%, is there what is your current thinking about the sorts of matters or categories of matters that will be taken into account in that part of the equation?
They're very customer heavy. So one of the things that we're very proud of is that we launched BT Advisor View in 2014, which in essence front run the financial advice register that ASIC's put in place. So we have two key performance indicators for that. One is how many responses you receive from your customers, and the more responses you receive, the better. And then two, the customers get a chance to rate you a score out of 5, and also the customers give chance to give feedback.
I'll just need you to explain mechanically how this works. Is it done by phone call or letter or the internet? Or?
So we send a letter or an email actually to the customer. They then go to the website, BT Advisor View. It invites them to give commentary on their advisor and answer the 4 or 5 questions, which are around the experience. Were they knowledgeable? We send about 5,500 responses to customers every year to provide feedback on BT Advisor View.
So that's part of the 80%?
That's it, sorry. So that's part. We've also got another customer metric called people helping people. In essence, it's around how many customers you can see a week and add value in terms of a conversation. It doesn't mean sales. Some of those conversations could be discovery conversations where you're educating and informing. Some could be at a plan presentation. Some could be an ongoing advice review. But it's, in essence, the level of conversations that you're having every week.
And so that's 2 items. Are there any other categories that go into the 80%?
So that's 3.
Sorry, 3.
Well, I dropped to 2, I'm afraid, Mr. Sheehan, only, not 3, I thought, but...
Sorry, I should have been clearer. There's one...
There's the financial metric, there's the 2 KPIs, which you described as customer heavy, the responses from customer ratings, then people helping people.
Yes.
Yes.
Have I covered the field so far?
You've nailed it. That's 4.
Yeah.
And we...
Debate the maths.
And the maths is good. And there is a 5th. I can't remember it. I wish I could. It's brilliant. That's all you need.
The thing you remember is you're walking down the street, Mr. Smith.
Yeah.
We've all had that experience.
Yeah.
Mr. Sheehan, do you want to lead him on this fifth?
Is there an education and training aspect to the new categories?
That sounds like it would be a good key performance indicator.
Now, you were asked, Mr. Wright, some questions yesterday. This was at transcript 1429 to 30 about control weaknesses regarding the failure to detect poor file management. This was specifically referable to Mr. Smith's case, I think, and specifically with reference to the supplementary investigation report, which I think is tab 86 of your exhibits. Do you recall the passage? But turn it up by all means if you wish. It's WBC.
I do recall.
100.000.9464 at 9465.
Mm-hmm.
Now, and you were asked about, I think, changes that have been made since these events that might bear upon these sorts of problems. I think in your statement you deal with that topic generally at paragraph 417, is that right?
Yes, in relation to Mr. Smith?
Yes.
Yes, that's correct.
There's a very large number of items there, but what I wanted to ask you was whether 18N might have some significance to the control risk in relation to detection of poor file management.
Yes, absolutely.
Right. And I think I'm right in saying that the topic you deal with there is elaborated on at paragraph 195 in your report, is that, in your statement, is that right?
Yes, in terms of the changes to the compliance audits late last year, which have had a significant impact on the results, as Ms. Orr pointed out. Yes, that is right.
All right, thank you. Now, while we've got paragraph 417 there, if you can go back to it, in subparagraph G, there's a reference to the introduction of 2 new roles, not remunerated on a share of revenue basis.
That's correct.
And one of those is the portfolio advisor role.
Mm-hmm.
Is that the role that Mr. Mahadevan now has?
That's correct.
Right, thank you. Yesterday you were asked at transcript 1404 about paraplanning in the context of Mr. Mahadevan's advice. Do you recall those questions? It was put to you, I think, that Mr. Mahadevan had been able to override,
Oh, yes.
in effect, the paraplanner's suggestions.
Mm-hmm.
You said, in answer to my learned friend, that you didn't think that this control was able to be easily overridden. You said we have escalation processes in for a paraplanner and for their leader. It can't be easily circumvented. Can you describe for the Commission what the escalation processes are that you were referring to?
I can. So I think the first piece of context is that the paraplanning team sits in another division, which is our operation division, does not sit in advice. That's the first thing. Within that team, there is 2 escalation policies. One is for a paraplanner to escalate, and the second is for a paraplanning leader to escalate. In essence, those escalation policies are around where they feel that potentially it's not in the customer's best interest, or potentially the advisor behaviours is inappropriate in terms of demanding that the production of the advice document gets a hurry on. If they cannot deal through the escalation, which is registered, then it will go to the leader. Over the last year, I've probably been involved in 4 escalations. 2 have mainly around poor advisor behaviour in over-demanding. Those have resulted in 2 informal performance management, and the other 2 are able to sort out. So there's a very structured process to make sure it's visible, it's escalated, and it's acted.
And what are the consequences of escalation?
Well, I should have been clearer. Of the 4 cases that come to mind, 2 last year resulted in formal management for the advisors. 1 of them in writing, and that had impact on their consequence management points. So worst case scenario would be termination because the conduct is just so inappropriate. But that's possible.
Thank you. Now, since yesterday morning, Commissioner, we have discovered an additional documentary reference error in Mr. Wright's statement, which I can deal with him now if it's convenient. I've drawn it to my learned friend's attention.
Well, perhaps deal with it now. Yes, go on.
Thank you, Commissioner. In paragraph 25 of your first statement.
Paragraph 25 of my first, yes.
I'm sorry, forgive me, paragraph 218. Now I'm making mistakes. You refer to a document at tab 25. Have you got the actual document?
Oh, yes, I know this one.
And
It's
if
not
you,
there.
If you look at tab 25,
Yes,
I think you'll see it. It's not the document
yes.
to which you intended to refer.
Mhm.
Is this, I'll give you a hard copy for the moment, but is this the document to which you intended to refer? I don't know if it's in the system yet, Commissioner, but it will be WBC.104.004.0471.
Yes.
Right. Thank you. I'll ask that it be substituted for the existing tab 25, Commissioner.
Any reason not to, Ms. Orr?
No, Commissioner,
Very well.
thank you.
I'm sorry. The existing tab 25 is referred to for another purpose at paragraph 53, so if this can just be tendered as an exhibit.
Well, I'm lost, Mr. Sheehan. What are we doing?
Tendering it as an exhibit.
Yes. Exhibit 2.126. Document entitled, quote, "Another exciting move. BTFA remuneration framework. WBC 104.004.0471 will be exhibit 2.126.
I've no further questions, Commissioner.
Thank
Might
you.
Mr. Wright be excused?
Ms. Orr, is there anything arising?
Thank you,
Mr.
Commissioner.
Wright, thank you for your evidence. You can step down. You're excused further attendance.
Commissioner, you asked me yesterday about the position regarding HEFRON, the people who organised the self-managed superannuation fund for the
Yes.
complainant. I can tell the Commission what my instructions are about that, if it would assist.
Yes.
That they've been communicated in writing to
Yes.
the Commission solicitors. HEFRON is an independently owned self-managed superannuation fund administration business that assists clients in administering their SMSF structures. Westpac has no financial interest in Heffron, does not hold shares in Heffron. Since June 2011, Westpac has had an agreement known as an alliance agreement that governs the services that Heffron provides to Westpac and its clients. For example, the agreement requires Heffron to provide all services reasonably required for the proper administration of Westpac clients' self-managed superannuation funds. The alliance agreement does not oblige Westpac to refer clients to Heffron, and Westpac does not receive any payment from Heffron if it chooses to refer clients.
Yes. Thank you.
Finally, Commissioner, I mentioned yesterday that I would seek to tender two other documents related. One is a dated version of the email that already appears at MW2 tab 25, and the dated version is WBC.104.003.7507. And with it, Commissioner, I tender a web archive print from the relevant period, 28th of March 2015, for the website that's referred to in that email. That's WBC.104.003.8323. The only relevant passages being those on page 8347, commencing at paragraph 291 and going to paragraph 295.
Yes. Those documents together will be Exhibit 2.127.
Thank you, Commissioner.
Yes. Is all?
Commissioner, the next case study through which we will examine inappropriate advice relates to ANZ, so it may be necessary to have a brief adjournment to allow ANZ's representatives to come up to the bar table.
If I come back at 12:10.
Thank you, Commissioner.
You can do it.